Now let's talk about volume growth, and volume growth has been pretty decent. It is around that 7 to 10% mark over the last 3 to 4 quarters, but then the momentum coming up, and this quarter itself it's at 11%. So definitely there is a positive momentum. Of course there are some adjustments to it also, but nevertheless this is a strong performance despite the headwinds coming in the industry. So I'm going to give this a thumbs up as well. Let's talk about shareholding, and largely it's neutral. Promoters hasn't moved an inch. It's at 71%. One side FIs are there, slight decrease coming in, but the other side the DIs are lapping from 16%, that's coming into at 18%, and FIs largely there has been a decrease from 7% to 5%. So net it's a neutral rating for the shareholding segment. But let's talk about street cred, how much money actually the stock has made, and at times seems like there has been a patience testing, especially if you're a long-term investor. Last 5 years, no return has come. It's been flat. Congratulations if you are a trader, you have made money in bits and pieces, and that is why from May lows the stock is up 12%. But definitely there is a correction in 1 year and 2025 highs as well. To balance things out, I have given this a neutral rating in my analysis. But valuations, do you think despite the stock not performing in the long term, are the valuations quite cheap? Well, the answer is no. The valuations of the entire industry is on the expensive side. Just remove Global Spirits, that's on a 12-month forward P of just 13 times. But the other bigger names, the main 3 companies which we are actually targeting, UBL, United Spirits and Radico Khaitan, all of them having the valuations between 54 to almost 70 times the forward P ratio. So yes, the valuations are expensive, but this is something which is very generic in the industry, and I'm sure most of the viewers who are tracking this company would know and justify this. So let's keep this a neutral rating here when it comes to the valuation picture. But let's understand the analyst take, what's happening here. There are almost 22 analysts tracking the stock. 12-month target price is 1442. This is the number which you should note down, and there is a concern. One side the analysts are bullish, 36% of them, while hold is 18%. That means majority is still in the buy and hold category, but the sell category is also not small. 46% of analysts have a sell rating as well. So there is a divergence in analyst community also for this counter. So I'm going to keep things balanced, and I'm going to give this a neutral rating as well. But let's try to understand the KYC ratings for United Breweries, how things stand as the moment, and of course things change a lot in future as well. Income statement, balance sheet is neutral, but company has done well in the cash flow and the volume growth front. So I've given this a thumbs up. Let's pull in the street cred and shareholding, and largely that has been quite neutral. Valuations, this industry is fairly expensive, but analysts take divergent, buy or sell. So a little bit of concern, but the total KYC ratings for United Breweries overall comes at 5 out of it, largely in line to positive numbers. And remember, this is the numbers on the past data as well. Things change in the future also, so do keep that in mind. But let's try to understand from the management, and we will be joined in by Vivek Gupta, MD and CEO at United Breweries. But this entire conversation will continue just after the break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया एक ब्रेकफास्ट आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है, बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? चैनल तक अलाउड? 1 हफ्ते की शूटिंग के बाद में।
Welcome back to Know Your Company, and now we are joined in by Vivek Gupta. He's the CEO and MD of United Spirits. Sir, of course, a good set of numbers, especially with, you could say, a challenging quarter. The cash flow from operations has improved significantly. Do you think this momentum will continue?
Yes, I think we are overall very excited with the quarter results, especially around category growth. This is the second quarter in a row where category grew more than double digit, and we grew almost 13% in our sell-through volumes and 9% in the sell-in volume. You're absolutely right. We reduced almost 20% inventories for 2 reasons. One is we wanted to make sure the beer remains fresh, especially when we come out of the season and during the monsoon period. At the second time, cash is extremely important in a scenario where the cost has got significantly increased behind the Middle East war. So the discipline in the organization to manage cash flow has really helped us to accelerate our growth as well.
And sir, the Q1 volumes grew 13% despite inventory reduction. Is this demand sustainable?
The 13%, let me correct, is our sell-through volumes. Our sell-in volumes are 9% because of the inventory reduction. We do expect category to grow, the category growth to be high single digit to double digit over the next few quarters, because some of it is very structural. As I mentioned in my note yesterday, I think it's a time where there is a revolution happening on beer, especially led by Karnataka, where they brought a revolutionary policy to have taxation based on ABV, and we are seeing a significant jump in the beer category. Last year, Maharashtra did some reforms on taxation, which meant that category is growing more than 20% there. We have seen category growth in Jharkhand behind privatization of retail. So some of these numbers are coming behind structural policy reforms, which were long overdue. And some of it is also happening behind strong summer season. But I do expect that the structural reforms will continue and which will continue to make sure that the category will grow. And at the same time, as UBL, our role is to be the category maker. And we continue to invest in brands and invest in programs which lead to the category growth. So I am quite positive that the category momentum should continue in the coming quarters.
Right. Sir, the Q1 EBITDA margins declined this quarter. When do you expect this margin to recover? Of course, the impact was because of supply chain disruption and input cost inflation.
No, thank you for sharing. As I mentioned in the last quarter's call, our industry and specifically our company has been significantly hit by the war impact on the cost. We estimated it is anywhere close to 400 to 500 crore impact on our profits for this year. Despite a 300 bips impact on our gross margin, the team did an excellent job in recovering almost 150 bips out of initiative through better mix, through our own internal cost initiative. I don't think we are out of woods. We are still pleading and requesting states like Telangana, Andhra, and Tamil Nadu to reconsider the pricing, because we sell to the government corporations in these states. And viability of business is extremely important, because if our raw material cost is going up, our packaging cost is going up, there is no way we can recover that cost unless we get higher EBPs or higher price from the corporation. So we are in consistent conversation through BAI and directly with the government to reconsider the pricing. So unless that changes, the pressure on margins will continue to be there. But at the same time, we continue to work our internal programs to save cash, save cost, and make choices. So we continue to invest behind the brands and consumers.
And Vivek sir, you're mentioning about the states, a lot of factors are moving positively as well as some kind of stress, but Karnataka policy, that seemed to be positive. What kind of impact we can expect?
See, it's early days. We are into the third month of the Karnataka policy. What we are seeing is a category growth upward of 40 to 50% in the first 2 months. As I said, it's fueled by summer as well as the policy change. But we feel very positive that this change is the right change for the category and for the consumer, because with the youth population and especially almost 23 million people coming to legal drinking age, I think going towards moderation, having more socially responsible drinks like beer, and having taxation based on alcohol content is the right thing to do. So I really want to applaud what Karnataka government has done here. So I think first it's the right thing to do, and we believe this momentum will continue, and the early signs are extremely positive behind this policy.
Interesting. And Vivek sir, how much headroom do you see for premiumization playing out over the next 3 to 5 years?
See, as I mentioned, we expect premiumization to continue to happen in India and accelerate in this, in this category as well. In 2024, we actually grew premium business by almost 34%. Last year, we grew by almost 23%. And I do expect a similar growth rate to continue in the coming years and years to come. And for us, our brands like Heineken Silver, they are already growing at 28%. Our Ultra is growing at 12 to 14%. And more importantly, we have also got a structural profitability right now, where premium is going to be margin accretive for us going forward, which means that there is more incentive for everyone to invest behind premium brands. So there is a lot of headroom. I think at the same time, we need to really make sure that we manage the affordability at the mainstream and the economy end, and we continue to drive our superior execution at the premium end.
And Vivek sir, how much capacity addition is planned, especially over the next 2 to 3 years?
See, recently we actually announced the commissioning of our can line in Telangana, which actually the first cans were produced last week and also sold to the consumer. Our can line in Maharashtra is on track. We should be able to get our first can from that line in a couple of months. Our greenfield project, which we already announced in UP, is on track, where by end of next year, we will have significant capacity enhancement. We also are working with our partners across India. We work through 17 contract manufacturing partners where we are utilizing capacity. We also are planning to make a mega investment in state of Karnataka in the coming days to enhance the capacities as well. So there's a lot of work happening on capacity.
Right. Speaking of capacities, what will be the long-term mix between the owned manufacturing setup and, say, a contract manufacturing setup? How do you see things moving ahead?
I think, for us, it will be a balance. We do expect to be 60-40 kind of a mix, where, long-term 40% could be contract manufacturing in certain states, because in some states there is excess capacity and it is not right for the industry to create more capacity when the existing capacity is not utilized. So for the overall value chain, we do expect contract manufacturers playing a big role in our growth plan.
And Vivek sir, is there any impact, be it positive or neutral, for the UK FTA which has been completed?
Actually, beer is not part of UK FTA, unfortunately, so we don't see any impact on beer.
Right. Apart from this, also let's try to understand, the FY26 borrowings. Is it all short term, but it has spiked? What's the reason for it? And by when we can see the normalization of these short term debt?
I think some of the borrowing is because we continue to make capex investment behind the capacity expansion and new breweries you asked. But some of the borrowing is because we still have significant outstandings in one of the states. So it's a combination of that. So I think we will need to have a good ratio of debt and equity as we continue to invest behind the category growth in India.
Vivek sir, you mentioned a huge number of youth actually coming in the drinking age. So what are the consumption trends looking like in the beer segment, be it Gen Z, be it millennials?
See, I think, as I said, this is a revolutionary time for beer in India, and we have seen what a policy intervention can do. See, 23 million youth are coming to the legal drinking age. All our surveys are suggesting that 70 to 72% of them wants to try a drink. And it is for us to orchestrate towards more socially responsible, moderate drink, which actually builds connection and socialization, which is beer. So I think a lot depends on how the policy interventions are coming, and beer needs affordability, availability, and awareness. We are very positive on what we are seeing in states like Karnataka, states like Andhra, and states like, Jharkhand, where, either the retail environment is improving or affordability is improving, and youth are preferring beer. And Kingfisher is actually still the most preferred brand when it comes to trying a new beer. So we believe that future in India of beer is very, very, very strong. If you look at other countries, the big markets for beer are Brazil, Russia, China, all of these emerging markets. And as we go towards 5 trillion economy, beer will play a big role in us. We also did an economic impact study which showed that, we contribute to almost 43,000 crore in countries' GDP, which is 0.1% of GDP. And there is a lot of scope for the industry and the category to grow in India.
All right, Vivek sir, it's always a pleasure to have you, and you've given us the entire picture of the company, the growth prospects and industry, and how Gen Z and millennials habits are shaping up in the beer industry. It's always a pleasure to have you with us at NDTV Profit, and best of luck. So that's the management of United Breweries, interesting company, and also the stories, especially on the youth consumption trends, what Gen Z and millennials are thinking, and the company's expansion plan augurs well as well. But the question is, are the valuations attractive for this company or this industry? But for those interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myths from facts and explain why listening better could mean living better. Only on NDTV Profit.
Who's Ayush?
Hi, thanks so much for joining in to our ongoing coverage of the Reserve Bank of India's Monetary Policy Committee's review of the monetary policy that has been discussed, of course, since this morning. The outcome of that meeting took place, and some of the headlines that you need to pay attention to. First and foremost, the Monetary Policy Committee as a whole voted unanimously to keep the policy rate unchanged. They've also decided to keep the stance neutral. What you're seeing on the screen is live visuals from Reserve Bank of India headquarters on Mint Street, where you're soon, in the next couple of minutes or less, going to listen to the Reserve Bank of India governor speak about the policy and take questions from reporters, including NDTV Profit's Piyush Shukla, who's at the event right now at the press conference. And I'm sure there's going to be conversations about
press conference, third for the financial year 2026-27. We have with us Governor, Reserve Bank of India, Shri Sanjay Malhotra, along with Deputy Governors, Shri Swaminathan J, Dr. Poonam Gupta, Shri Shirish Chandra Murmu, and Shri Rohit Jain. We also have with us Executive Directors, Shri Sanjay Kumar Hansda, Shri Indranil Bhattacharya, and for the first time, Shri Ravi Shankar. I also welcome my other colleagues from the Reserve Bank. Sir, there are 26 participants from the media. And before we begin, we have two housekeeping announcements. First, I request the media participants to please stick to only one question. I repeat, only one question, so that everyone gets a chance. And second, request everyone to please switch on the mic while speaking, so that those watching the live telecast are able to hear clearly. And once you have finished speaking, please switch off the mic. So with your permission, I will now call out the names.
Yeah, please do so. Even I want to emphasize that, please ask only one question. And in case you ask two questions, then I have the option to answer which question I will answer. So please be very sure which question you want to ask. And in case there are questions left, which I doubt there will be, we can come back. So don't think that your question will go unanswered, provided it's a different question which has not been asked by any of the 26 participants who are here. So kindly, let's follow this rule and keep it brief. So first question, as usual, is by Lata. And then, right?
Yeah.
So you are changing the sequence?
No sequence, sir. Yeah.
Okay.
Yeah. Thank you, sir. I'll request Ms. Lata Venkatesh from CNBC TV 18 to please ask the first question. Lata, please.
Thank you very much, Mr. Brijraj, Governor, and everybody. Sir, the market found your policy statement more dovish than expected. And their reasoning was, if you look at your inflation forecasts, it is above 5% for almost 1 year. That means well above your target by 100 basis points, well above the given target. As well, the real rate, therefore, becomes negative for a better part of the next 6 months or so. So is it that you are going to concentrate on core inflation? And when you deduct, you're looking at T-bill. If you take the T-bill 1 year ahead and deduct the 1 year ahead core, only then you come somewhere near a real rate of 1.4. I mean, are you going to be reconciled to a negative real rate or a very, very low real rate?
So let me first of all say, we are neither, dovish nor are we hawkish. We feel that this is the right policy rate for the given growth inflation dynamics that we are in today, and the outlook that we have projected ourselves. There is a lot of uncertainty, which will, of course, play out. The framework is very clear. I don't think there should be any confusion about the framework. Our target is headline. It's not core or core excluding pressure. It is the headline inflation, which is the target which has been given to us, and we'll continue to be guided by the headline inflation. And it will be our commitment, it is our endeavor to bring the headline inflation in line with the target over the medium term. As was mentioned even earlier. Now, why we look at core and core is because we need to know as to what the underlying inflation is and where headline or underlying inflation is going to converge going forward, because headline inflation because of food and now because of fuel, because of the external shocks, can be very volatile. And so, as I mentioned even in the earlier press conference, that this volatility is not something that we would like to bring in even in our policy repo rate. So it's in the medium term that we target our policy, medium term target our headline inflation. And accordingly, we will take action as may be required, given the outlook and how the growth inflation dynamics play out.
Thank you, sir. We'll take some more questions from our left side before we come to this side. I'll now request Manojit Saha from Business Standard to ask his question. Manojit, please.
Thank you, sir. Thank you. My question is on FCNRB scheme. Is there an option for you to close the scheme prematurely before the deadline in case a certain amount of inflows coming? You may have a target in your mind. So, because I'm asking this because there is a cost to this scheme because RBI is subsidizing it, and there is a view that the situation is now not as bad as 2013, where India was considered a fragile five. Forex reserves were only 275 billion as compared to 700 billion around. So that concern is there. So is there an option to close it prematurely once you get the amount of deposits which you may have in your mind?
We have got robust flows, as you have mentioned, and we do hope to get good, healthy flows going forward. As of now, there is no proposal under consideration to close the scheme prematurely. We will keep you posted on this.
Thank you, sir. I'll now request Anup Roy from Bloomberg to ask his question. Anup, please.
Thank you, sir. Sir, we have seen $40 billion being mobilized by the FCNRB scheme, and yet the rupee has not appreciated much. I'm just trying to understand what is happening there. Is it because you are squaring off your forward position and the dollar is not coming into the market? Can you please let us know what is happening there?
I think the underlying fundamentals of our Indian economy are very strong. As I have earlier mentioned, there can be an argument, as some people have made, that it is perhaps, on nominal or real effective exchange rate terms, it may be undervalued. There is a lot of uncertainty. It is quite possible going forward as the tensions and the conflict de-escalates, it is quite possible that the rupee may further strengthen. It has strengthened over the last 1 month or so. It has strengthened from 97 levels now to about 95 levels. So it has strengthened. And our policy has always been that the markets determine the prices level and the band. We don't pursue. We only we only intervene in case there is an excessive volatility, there are speculative pressures that are getting built in. And it will be our endeavor that the trajectory for rupee remains orderly and there is no disruptive movement or there is no expectation, self-fulfilling expectations getting built into the exchange rate.
Yes. Thank you.
Thank you, sir. I'll request Hamsini Karthik from Money Control to ask her question. Hamsini, please.
Thank you, sir. Good afternoon. My question is also pertaining to FCNRB. I would like to understand if you could please help us with a geographical split of where this deposit flow has really come from and whether the deposit flow has ticked all the boxes in terms of BOP management, liquidity and forex from an RBI standpoint.
Yes, as of now, it has ticked all the boxes. You asked two questions, but they are related, so it's okay.
Thank you.
And your second question is geographies we don't have. We don't collect geographies. But the flows, as I said, have been robust. We had, even before these measures, a very strong and a comfortable external position. This further fortifies our external position, including the BOP.
Thank you, sir.
Thank you, sir. I'll request Ekta Suri from Z Business to ask her question. Ekta, please.
आज आपने अपनी पॉलिसी में एक स्टेटमेंट से बताया कि मार्जिन्स जो हैं बैंक्स के अब उतने शायद ल्यूक्रेटिव या उतने अच्छे नहीं हैं. आपने ऑफ कोर्स इंग्लिश में बोला था, लेकिन उतने बेटर नहीं है जितने पहले होते थे. तो सर, क्या सर आरबीआई ने इसे अकाउंट में लिया और इसी वजह से जो आपने बल्क डिपॉजिट्स पर डिफरेंशियल रेट्स का पेपर निकाला, क्या उसकी एक वजह ये भी है? और क्या अब आरबीआई इसको ट्रैक करेगा कि बल्क डिपॉजिट्स पे बैंक्स जो हैं जो किसी और तरीके से मार्केटिंग एक्सपेंस या किसी और तरीके से ज्यादा पार्टीज को फेवर कर रहे थे या उनको एक्स्ट्रा पैसे दे रहे थे डिपॉजिट्स के नाम पर, सर उसको क्या आरबीआई ट्रैक करेगा? और ऐसे ही बैंक्स जो हैं अपनी जब रिजल्ट्स आते हैं तो सर उसमें टेम्पररी फिक्स डिपॉजिट्स लेकर अपने कासा को इन्फ्लेटेड तरीके से दिखाते हैं, तो इसको आरबीआई किस तरह से लेगा सर? सर सब कुछ डिपॉजिट से ही रिलेटेड है.
3 क्वेश्चन आपने पूछ लिए, एक नहीं.
सर अंडर वन अम्ब्रेला ऑफ डिपॉजिट्स.
वो एफसीएनआरबी में भी उन्होंने 2 पूछ लिए. बल्क जो हमने इंटरेस्ट रेट के गाइडलाइंस जो आज निकाले हैं या पहले जो निकाले थे, आपने पहले वाले के लिए जिक्र किया, वो निम की वजह से, निम में जो कमी हुई उसकी वजह से नहीं थे. वो जो अंडरलाइंग कॉस्ट है डिपॉजिट की, जो भिन्न जो डिपॉजिट जमा करता है उनके लिए भिन्न हो सकती है, क्योंकि हमारे जो दिशा निर्देश हैं विशेष करके एलसीआर के लिए वो अलग हैं. तो उस चीज़ को ध्यान में रखते हुए हमने वो गाइडलाइंस निकाले थे.
So the other two parts
अगर नहीं आएगा वो क्वेश्चन, अगर कोई नहीं पूछ लेगा तो ठीक है, नहीं पूछेगा तो आई विल कम बैक, तो वापस आपके पास आएंगे.
थैंक यू.
अगर कोई पूछ लेगा तो ठीक है, नहीं पूछेगा तो फिर वापस आपके पास आएंगे.
थैंक यू.
सभी प्रश्नों का जवाब जरूर दिया जाएगा, बशर्ते समय की सीमा में रहे.
धन्यवाद सर.
Yes, Bridge.
I'll now request Anurag Shah from ET Now Swadesh to ask his question. Anurag, please.
नमस्ते सर. सर, जिस तरह से आज एक बड़ा ऐलान किया गया है आपके द्वारा लोन इंटरेस्ट रेट कैलकुलेशन का, तो सर ये क्या उसी तरह का बड़ा ऐलान है जिस तरह आपने अभी मिस सेलिंग से जुड़ा हुआ एक ऐलान किया था, जो 1 जनवरी से नियम लागू हो रहे हैं, जिसकी काफी सराहना भी हुई, बाकी रेगुलेटर के द्वारा भी सराहना की गई. तो लोन इंटरेस्ट रेट कैलकुलेशन के नियमों से सर आम जो करोड़ों लोन लेने वाले लोग हैं उनको क्या राहत मिलेगी, कब तक इसके नियम लागू होंगे और किस तरह से आरबीआई एक दिशा निर्देश देगा जिससे लोगों को राहत मिलेगी?
ये जो इंटरेस्ट रेट के नियम हैं, इसका प्रमुख जो कारण है वो ये है कि विभिन्न जो हमारे रेगुलेटेड एंटिटीज हैं उनके लिए भिन्न भिन्न निर्देश दिए हुए थे. तो उसको युक्ति युक्त करने के लिए और स्टैंडर्डाइज करने के लिए हमने ये नियम निकाले हैं. और इससे ट्रांसपेरेंसी, पारदर्शिता वो भी बढ़ेगी क्योंकि लोगों को सबको मालूम रहेगा कि जो ब्याज दरें हैं वो क्या हैं, किस प्रकार से सेट की जाती हैं। तो मुख्यतः ये एक रैशनलाइजेशन एक्सरसाइज है जो कि कंज्यूमर प्रोटेक्शन को और अधिक बढ़ाएगी।
तो लोगों को ये नहीं समझना चाहिए कि ईएमआई बदल जाएगी, ईएमआई तो उतनी रहेगी, लेकिन आपको
जी हाँ जी बिल्कुल
सही पारदर्शिता तरीके से अपना ब्याज और प्रिंसिपल समझ में आएगा।
Sir, can you please repeat in English, because that was to be my second question also. The market is very confused. What do you mean by all regulated entities? Will NBFCs have to declare EBLR? All those confusions
Will
are there.
NBFCs have to have external benchmark?
देखिए वो all those details will be there in the draft guidelines that we are coming out with. So please wait for those guidelines. All the details are over there. It is not a major change, as I have mentioned to you. The same, there is no requirement. There is no major change in requirement as you are referring to with regard to NBFCs and bringing them onto EBLR, etc. There is no major change. There is only a rationalization. Perhaps DG Shirish can further clarify.
No, you are right, sir. You have to wait for the circular to come out. Only thing I can tell you is no major change, and emphasis is on transparency and basically conduct related. So don't look at the substantive part, but nevertheless, wait for the circular. It will come out soon. Thank you.
Okay. Yeah. Thank you, sirs. Sir, we'll now take a few questions from the right side. I'll request Sangeeta Mehta from Economic Times to ask her question. Sangeeta, please.
Thank you. So this, your policy statement, you have said that transmission of policy rates have moderated, and now with the swap window being opened, we expect liquidity to surge, and it has surged and it might surge further. But do you expect banks to pass on the benefits of liquidity to the customers? Because banks are already talking about improving NIMs and things like that. So it's kind of wanted to understand that.
Liquidity will obviously help everyone. It was required, but let me mention that the liquidity may be in surplus only, for the very short term. It may peak, around in Q2, around September or so. And going forward, it should get absorbed because of our normal needs of the economy through increase in currency in circulation, higher requirement for reserves because of deposit growth. We also have some forwards which are getting matured. So overall, of course, it will help, but it is not something that is extraordinarily high liquidity.
Doesn't answer that. Would you expect banks to still have some?
As I mentioned, it is not substantial. So it will only help, at the very margins. It's not extraordinary or substantial over a very short period of time. And this is the kind of liquidity that we, even otherwise every year, through OMOs and other means, through swaps, we provide this kind of a liquidity. Now, a lot of it, of course, will depend on the amount of FCNRB deposits that we will get, but it should, more or less, it should get absorbed in the medium term.
Thank you, sir. I'll request Jasprit Kalra from Thomson Reuters to ask his question. Jasprit, please.
Thank you, sir. Governor, my question relates to succession planning at banks. There have been instances where banks have taken longer than a 6-month renewal cycle for the top leadership. Some other places, CEOs have left within one term. Given the ambition for India to have larger banks that can have a global reach, analysts have also pointed out that the tight grip on compensation, etc., for top talent at banks can have a limiting impact on the sort of talent banks themselves can draw. Do you see room to sort of review some of these rules that are in place and maybe relax some of them going forward?
There is no proposal as of now.
Yeah.
But do you not see a need as well, given the ambition to have larger banks?
We obviously have a need. I mean, we all obviously, would like and aspire to have more and more banks. But whether it is coming in the way or not, as I mentioned, has not been examined by us, and there is no proposal in this regard, which is pending.
Thank you.
Yeah, thank you, sir. I'll request Piyush Shukla from NDTV Profit to ask his question. Piyush, please.
Good afternoon, Governor, DGs. Thank you, Brit sir. Sir, yesterday the government has made some amendments to the Payments Act. Now there is chatter that there could be, government may levy MDR on certain transaction, whether above 2,000 rupees, or it could use that on large retailers. You have earlier mentioned how somebody has to bear a cost for this public infrastructure utility. I want to understand from RBI, will we look at transaction size? Will we target certain retailers? What is the strategy going ahead? If you can share some views on this front, sir. And last time, sir, you had said that the upper layer list of NBFCs will come out very soon. So how soon will it come, sir?
So, your first question I will answer is that it is very premature right now. The government is still carrying out the amendment. The costs have to be paid by someone. I mean, it's a public, we all want, that this public infrastructure should continue to strengthen, maybe become more efficient, etc. We continue to do that. That's our primary focus as of now. Let's wait and watch for further developments on this. I don't have anything more to add.
Will the user get charged, sir? Because if you're levying a fee on a merchant, eventually it passes on to customer. So the goal is to have 800 million transactions a day or so. So imposing a fee.
Let's wait. It's premature right now. But please keep in mind also that ultimately it is the consumer in some way or the other who's paying it already. So it may not be the same consumer, it may be, the general economy, and you don't get to see it directly, but already it's, to answer partly, your question, whether it gets passed on, somehow, it's already getting passed on. It may not be directly on to the user pays principle, but someone is paying the cost. This is what I meant. Someone will have to pay the cost. I said this earlier, and even now I'm saying. So what is important is that we continue to invest and we continue to find the means, whether it is through MDR or other things. I think those are matters of detail. Let's wait and see how the situation evolves going forward.
Yeah. Thank you, sir. I'll request Ankur Mishra from ET Now to ask his question. Ankur, please.
Thank you, Brit sir, and good afternoon, Governor. First of all, I just wanted to get what is your assumption on crude and rupee? Please don't consider it as question. To ask on, I want to understand your sense more on GDP front. In last to last policy, of course, the FY27 forecast was 6.9%, then it came to 6.6%, and now we are at 6.7%. Given in the first quarter itself, you are saying 7% growth is possible. Is there a scope of overall 7% growth for FY27 which is possible, considering the fact that the data which has come in the past also has been better than what was forecasted?
The 6.7% growth that we have estimate, the outlook that we have given is an estimate. And we have also mentioned that the risks are evenly balanced on both sides. We also give a fan chart to give, the relative probability distribution. So if you look at the fan chart, it will suggest that there is a possibility that the growth, to answer your question, there is a possibility that the growth may be 7 or more.
Yeah. Thank you, sir. I'll request
assumption, if you can
answer only one question. And this is not something, that I think we answer. This is internal to us. And these are market sensitive information, which we would not like to give.
I'll request Shayan Ghosh from Mint to ask his question. Shayan, please.
Governor, I wanted to understand. So in April, RBI had asked banks to submit a board-approved policy on AI-related cyber security resilience to RBI. And within a couple of months, we have seen a large bank facing a cyber incident where a lot of customer data was put on the public domain. Will there be a cost to such incidents in the banking sector when banks fail to adhere to these guidelines, or they are not prepared enough to counter these attacks?
The IT systems of our major banks and big regulated entities are quite strong, robust. They have put in place checks and balances to ensure that they are secure. We have not only guidelines and regulations, we also have a supervision which is done very regularly. Any shortfalls or vulnerabilities are pointed out, measures to be taken to further strengthen the systems are suggested. They are followed up they are monitored, they are followed up to ensure that the systems continuously, while new threats and vulnerabilities keep coming up with new developments in the IT sector. At the same time, our banks and regulated entities also keep preparing and making themselves more secure and more resilient.
Thank you, sir. I'll request media persons to please ask only one question, as was informed earlier. I'll request K. Ramkumar from Hindu Business Line to ask his question. Ramkumar, please.
So there has been a divergence in the credit and deposit growth.
Divergence between the credit and deposit growth, with credit growth outpacing the deposit growth actually by a huge number. So just wanted to understand, will this not create a situation where lending rates will go up, deposit rates will go up? And my second question is about whether the transmission is complete, monetary policy transmission.
So I answer your second question. Monetary policy transmission is about 80 basis points. It has moderated. It was about 90 basis points on the lending side. And so I would say, that it is more or less complete.
Thank you, sir. We'll now take the remaining questions from the left side. I'll request Madam Falakna Sayed from Deccan Chronicle to ask her question. Falakna, please.
Sir, according to reports, Paytm Payments Bank had around 800 crore of funds that are locked. Of that...
Okay, all right. So that's the word coming in from the press conference of the Reserve Bank of India to talk about monetary policy and, in fact, banking system regulations as well. We'll get you all of the highlights over the course of the day. For now, this is the wrap on the policy coverage for this moment. Lots more coming up after the break. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ।
हर सफल बनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
द मस्टर्ड स्पेशलिस्ट सिंस 1933, बरसों से सरसों।
कुछ तो बात है इस दिल में।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio with me, Hiral Datia and Sharad Dubey, who's standing at the profit pit. Sharad, an extremely volatile day of trade, though the MPC, the RBI policy kind of has been a non-event.
Exactly, you're right, Viral. It's largely a non-event when you talk about RBI, MPC, and market has moved on. But a little bit of sell-off is coming, and look at that. We're at the end of, you could say, the day's low level. Also, Nifty Bank, that's where the sell-off has actually intensified, especially on the private names. That's also down almost 270 points. A little bit of gyrations were happening during the RBI MPC meet, but nevertheless, it's largely factored in. And there wasn't much surprise as well. But let's look at the key factors, what you should be watching out for. And the traders are suggesting a consolidation can be there going ahead, but you never know what happens in the closing session. RBI MPC has kept its rates unchanged. Of course, concern might come in, especially on the minutes when we start reading that. Nifty Bank is very volatile also. We can see up moves also, down moves also, both sides it's happening, but it's in a range. Also, let's look at the other key factors, and this is of course strong buying in the realty segment. This is a divergence, especially because it is interest rate sensitive. Auto also on the other hand is seeing a good buying. The global risk of sentiment is reducing, and small caps, interestingly, look at that, that's doing really well. So value based buying is definitely there on the cards, especially on the earnings where the reactions are happening. And speaking of earnings, 3 important earnings, Power Grid, Oro Pharma and Biocon are expected to come out with the results. We'll be tracking them. And also other group of earnings are also there, which are the larger ones, PB Fintech, Navin Fluorine, Cummins, which we'll be focusing on. So this is the entire picture for the day. But there's a very important impact of cash, that's which has been actually hunting or actually hurting the entire market ecosystem over the last 2 trading sessions. And today itself also we might expect some kind of stress. But to understand more, is this stress going to other players? We are joined in by Nimit. Nimit, please come. Nimit, is there a little bit of panic coming in amongst the broking community or the ecosystem right now?
Well, I don't think it's panic, because the sources that we speak to, especially the regulatory sources, they say that actually the problem here is not about the volatility, it's about the participation. Right. And once the pool becomes deeper, right, and we see more meaningful investor participation here in this SAS period, then there's going to be no volatility, and this volatility will reduce over time. In fact, they say that there are no plans to modify the current SAS framework that's been set out, and the sources within the regulatory framework say that the design and the technical architecture here is robust and it matches international standards as well. The simple message here is that over time, as we see more participation and widening participation, the volatility is naturally expected to just settle down.
Fair enough. Thanks a lot for that. And of course, the main thing is give it some more time. Some teething issues are coming in, and once the volumes picks up, then maybe the pricing, we won't see so much of that move. Over to you, Hiral.
Thank you so much for that. It's going to be interesting how this pans out, because this closing price becomes absolutely important from an F&O settlement, index calculation, mutual fund NAV, as well as ETF rebalancing aspects as well. And that's the reason why, you have the regulator who's coming out and saying that higher amount of participation is what is needed when it comes to cash, for cash to settle and not see these kind of gyrations which are coming in as well. So that's where, in fact, we will be constantly giving you updates in terms of how cash is panning out for the Indian markets right now going forward. But moving on, time for earnings. Alembic Pharma, that stock is buzzing in trade, and this is on the back of a good set of numbers that have been reported, mainly driven by US and the API business. The stock seeing gains of a little over 2%. To understand the quarter gone by and what's lined up going ahead, We are joined by G. Krishnan, Chief Financial Officer at Alembic Pharmaceuticals. Mr. Krishnan, welcome to the show and always a pleasure to speak to you. Like, first question coming to you is overall a decent set of numbers wherein a 25% revenue growth, profits have seen an uptick of around 12%. So there has been broad-based growth across businesses as well, or across segments, I would say. How are you looking at the quarter? Has it met your internal expectations?
Yes, thanks for having me here. And yeah, it's been a good start for FY27, and we had reported about 26% consolidated revenue growth, and this growth is supported. It's broad-based growth coming across the businesses. India branded business grew at about 7%. International generics came in at about 37%, and API grew at about 33%. And more specifically, US also witnessed a growth of about 49%. And this growth is actually, coming from not only from new launches. So we have had some pretty good new launches in the last quarter. In addition to that, the volume growth also has supported in US, and this volume growth is coming from the products that we launched in the last 12 months, and also from the existing products that we've got. So pretty much it is broad-based growth. And in addition, while the profit growth also is good, and it remained resilient even after considering the investments that we have made in R&D and the US branded platform that we are building. So we reported a EBITDA growth of about 21% and a profit after tax growth of about 12%. So overall, the quarter has given us good visibility on growth momentum, and particularly in US generics, while we have continued to maintain our investment priorities, which remain unchanged.
That's interesting. Now, Mr. Krishnan, the question that I have for you is then a 26% revenue growth, a 49% jump in terms of US sales. So would you describe this as a beginning of a new growth phase for Alembic, or is FY27 likely to be the peak of the current cycle?
Yeah, so Q1 had some good contribution from new launches, and the broader point is that then execution is improving across the platform, and especially when you look at US generics, API, and animal health. So it's broad-based execution that has supported the growth, and more specifically in US, when you look at the contribution from new launches, in addition to that, we have seen volume growth as well, right? So this gives us confidence that the momentum is more execution-led rather than purely any one-off, right? And we also have a good pipeline of new launches coming up in the rest of this financial year, and which is about some 15 odd products that we intend to launch. And overall, we have got about close to 289 ANDA filings that we have had in US, and about 185 product launches that we have already done. So it's more of a platform effect and the impact of R&D investments that we have done over the last few years. So we believe that this growth is sustainable, and also, that gives us the confidence that, we have upgraded our guidance for US from low double digit to mid teens. Now we are confident of doing mid to high teens growth for FY27.
Sir, one thing on the margins front, on a year-on-year basis, there has been a compression of almost 100 basis points. This is on a calculated basis. Do you think this margin pressure could be there going ahead in the couple of quarters, or is that bottoming out?
I would like to split the margin impact into margin performance into two aspects. One is the core operating performance, which has continued to deliver good leverage driven by volume-led growth. We have seen good improvement in capacity utilization across the facilities. So the underlying margins have improved over the last year. And what has happened is the investments that we have done in R&D. R&D investments have grown about 29% year on year. And also we have invested in US branded platform, right? So which is more of a soft launch that we did in the last quarter, and we see that scaling up over the next few quarters. So the investments that is strategic planned we are in the investment phase, which is what has marginally impacted the reported EBITDA margins. So the underlying EBITDA margins are really robust, and we are seeing operating leverage expanding as we go forward.
And Krishnan sir, the animal healthcare segment has done well. This is a very growing segment. How do you see this panning out? Any kind of expansion or any kind of investment plans are there for this segment?
So the animal health it's part of the India branded portfolio that we have got. So close to 20 to 23% of the revenue within the India branded business is coming from animal health, and consistently we have delivered growth of about 20% plus in animal health in the last year, as well as we have continued to maintain the growth trajectory in the first quarter. We believe there is opportunity existing both in farm animals, poultry, and also we have begun our journey in the companion animals, and there is good opportunity that we believe we can unlock as we go forward. Our focus will be on expanding the product portfolio, building the momentum with the existing field force, and also strengthening the on-field execution, which we believe, I think there is good momentum that we would like to continue to maintain on animal health.
Okay. My other question coming to you is, now everyone's watching out for the margin recovery story as well. With the way the first quarter has panned out, do you think that the operational leverage will finally start showing up meaningfully in FY27 itself, or do you think there is a potential of it moving to the first half of FY28 where material benefits will be shown?
Yes, operating leverage is already playing out in the first quarter itself. And if you look at the R&D pre-R&D EBITDA growth, that is much better than the reported EBITDA growth. And the reported EBITDA also absorbs a good amount of the ramp up in US branded platform that we are building, right? So that costs is already absorbed today, and the margin expansion is helping us absorb that incremental investment that is going into building the platform, as well as the additional incremental R&D spend that we are seeing. So the operating leverage is already happening as we speak, and we believe that the overall margin profile for the current financial year will continue to improve as we see the US branded platform scale up, ramp up in terms of operations, and then start contributing to the profit.
Okay, so lots to watch out for, but an interesting quarter. Thank you so much, Mr. Krishnan, for joining, and always a pleasure to speak to you on NDTV Profit as well. The stock's in gains of a little over 2% as we speak. But moving on, Motherson Sumi Wiring. Let's pull up that one on the screens. A strong 37% jump in revenues is what we've seen. However, soaring copper prices and wage hikes is what has dented margins, keeping profitability growth largely flat. That stock seeing gains of 3.5% has cooled off from the day's highest levels as well. But let's discuss the quarter gone by with Gulshan Pahuja, CFO, and Anurag Gehlot, COO at Motherson Sumi Wiring India Limited. Welcome to the show, gentlemen. Always a pleasure to speak to both of you as well. Overall, strong revenue and volume growth. However, as we mentioned, margins have remained under pressure. And yes, it's copper prices, wage hikes. The greenfield project ramp-up costs also, if I'm assuming correctly, are the ones which have dented margins. Do you think this is the trajectory that you are looking at in terms of FY27 as a whole, or do you think this is just a one-off and things will improve from here on?
I think good afternoon. First of all, thank you very much for taking us on NDTV Profit. As you rightly said, it's a strong performance in terms of revenue as well as in EBITDA. Obviously, we have done 3,407 crores with around 37% growth year on year, and where the market has grown by only 17%. So we are outperforming the market. obviously coming on the margin side, where we are seeing that the commodity prices, which is copper in our case, has gone around 53% year on year, and on sequential basis also, on quarterly basis also, they have increased. Obviously, that impact is there, and the abnormal manpower cost, which has increased because of the minimum wage impact in the NCR region, which has given a little impact on these. But as commodity prices are on the lag of major customer with a 3 months and rest of them for the small customers for the 6 months basis. So I think that recovery will happen over a lag of a quarter or a 6 months period. As far as manpower costs are concerned, obviously we have to do a lot of upskilling and to improve on the shop floor, because these cost increases in the past years also. But exceptional high, we always go back to the customer, and we have seen in the past as well that customer has understand this pain, and they have discussed this with us on to giving the claims and giving us other sort of alternate businesses to at least to nullify these impacts. But as Motherson Sumi Wiring is always a ROS focused company, you must have seen in the previous years also, we are performing more than 40% ROS. And for this year also, we are keeping a very good focus onto that. And if this year continues with the plan, what customer has given, the forecast given to us, I think we should be doing at the end of the year.
Okay. So everything said and done, will you be able to pass on the increase in costs to protect your margins in the coming quarters?
As I advise that copper, the commodity prices, they are as per the terms with the customer. So that is a lag of a quarter or a 6 months as per the agreements with the customer. And for the manpower cost, which are exceptional high, as I suggested that in the past also we have gone to the customer and they appreciated our pain. So this year also we'll be discussing with our customer on these areas, and we'll see how customer are going to help us in this scenario.
Gulshan, from your side as well, what's the outlook looking like in terms of business, if you have to look at the different segments, and where are you seeing heightened demand? Because the sales numbers, if you have to look at that aspect, pretty strong even in the month of July. And obviously that trickles down to the OEMs as well to some extent. But in the next 3 to 4 months, if you have to look at how the demand is panning out from OEMs, what are you picking up and what is that telling you for FY27?
Definitely, it's going to be a good. I think July went well, as you have mentioned, in terms of the automotive industry also. And as far as our growth is concerned, the growth is phenomenal in this quarter. I mean, it's a very historic in the company history as well, outperforming the industry by, significantly. Where the industry grew by 16%, 17%, we have grown by 37%. Even if you take out the copper inflation, we still have a 30% growth on our side. And July also went well. I mean, you have seen the industry numbers also, and as far as our performance is concerned, July also went well. So we are quite hopeful that the momentum which was built in the later half of last year was continued to be seen in this quarter gone by. So we are hopeful that we are entering into an era in the industry automotive era where the growth is not going to be, at least not going to be a degrowth. It would be sustained at the same levels, if not seen any multiple factors. So I'm very hopeful by this year, and we would be at a very good stage in terms of, obviously, target is to outperform the industry in all aspects.
And in terms of FY27, I'm coming back to the question, Gulshan, in terms of revenue growth versus profitability as well. Barely positive, right? At what point does growth start translating into meaningful earnings growth if an investor has to look at it? And two, there is confidence that you will probably outpace what the industry is doing, like the way you've delivered in terms of the first quarter. So should investors brace for good margin recovery towards the end of the year, or do you think it'll remain where it is?
I think The last year I can understand because when the greenfields were going in operations, but we maintained in the last quarter that now they have reached a stage where they have start contributing us, right? So from this quarter onwards, directionally we are going in that direction only. But we need to understand one thing very importantly, that we are going in a very cost challenging environment right now. In the beginning of the fiscal year, nobody has anticipated that this much increase would happen in the minimum wages. So we have been impacted by very significantly in this quarters. Of course, we have our discussions on with our customers. So some pass through would be there in the coming, and you will see in the coming quarters as the discussions concluded. But I would say if you just see at the normalized margins, I think we have already improved so much year on year basis also and quarter on quarter. So directionally, I think we already tread on a path where we need to look at the profitability which were there in earlier years. Second aspect, which is very important to note, that despite we had greenfields, we were able to deliver, the more than 40% over the past year, right? And in fact, since the beginning of the company in that way.
Okay, I think we'll have to reconnect as well. I think the audio is giving us some bit of glitch, but an interesting quarter that the company has posted so far, and lots to watch out for. Thank you so much, gentlemen, for joining in. So that's the management of Motherson Sumi Wiring as well, seeing gains of 3.5% as we speak. But the next set of numbers, Glenmark, the earnings have beat estimates, and this is mainly powered by the India business. However, the stock not really doing too much, down 0.2%. My colleague Mahima caught up with the management to discuss the quarter gone by. Let's listen into that conversation.
Hello and welcome. You're watching NDTV Profit. I am Mahima Vajrajani. In Glenmark Pharma is in focus on the back of its Q1 numbers, and overall, it was a strong showing, in fact, from the India and US business. Margin guidance also largely maintained. To understand as to how things have shaped up, how they're going to look like going forward, we're now joined by Anurag Mantri, who's the Executive Director and Global Chief Financial Officer of Glenmark Pharmaceuticals, joining us now. Thank you so much for taking out the time, Anurag. I'll start by asking about the US business, because that has delivered a sharp recovery this quarter, excluding, of course, the license income. But how should investors think about the underlying growth trajectory for this one, for the next few quarters especially?
Overall, let me first talk to overall business this quarter. If you see, we have the revenue growth of 23%, and even if I remove the IGI income-wise, that revenue growth has been almost around 18% plus. So it's a very strong quarter for us. And even, but if you see, EBITDA has grown up more than the revenue, which shows that our quality of earning is also improving. So, and this growth is also very broad-based this quarter. So we have seen across, like India continues to grow very strongly. US has grown very strongly. Entire emerging market, especially LATAM, MEA, and Russia, CIS have contributed double-digit. All contributed double-digit. And Europe can also continue to grow. So across all the geographies, we continue to do well. So, as I mentioned, that the EBITDA is growing faster than the revenue, so which is showing that the quality of earning is improving considerably. So in terms of our mix, in terms of withstanding the global pressures on the cost, which includes like, if you see the quarterly, this quarter, like across the thing, API cost is increasing, packing material cost is increasing, logistic cost is increasing, but despite that, we have been able to hold on to our margins of around 20%. So overall, this quarter has been good. But specifically in US, if you see that we had a good respiratory launch. We had launched fluticasone 44 mcg last quarter, and this is going very well. This was the exclusivity period, and which continued to do very well. And then also we have we are relaunched the Ryaltris with our own commercial franchisee. So that is also doing will also contribute to this year. And besides that, Monroe also has been restarted. We relaunched the Fulvestrant from Monroe. So that's the first commercial launch from Monroe, and it will start contributing meaningfully from FY28 onwards. So Monroe facility in US will also start contributing to that. And this year, H2, we are actually again launching the two we are expecting the two new approvals, which is one was fluticasone 110 and ipratropium. So which should also contribute well into our overall revenue mix. So we expect a very strong year for US, India, Latin, across the thing, and also Europe will continue to do do also well for us.
All right, but Anurag, from the prospect of guidance, just for the sake, if you have any internal guidance that you have in terms of growth targets for the US business.
So US business, we are expecting this year to be a $430 million plus of the revenue in this year, which is a very significant number as compared to the previous year. And we'll continue that momentum because US, we are seeing multiple launches, respiratory, injectables across that. So we are seeing a good growth profile in US this year.
Got it. You talked about multiple respiratory approvals in the second half of FY27. Just want to get more sense which product that you've planned to launch will have the biggest commercial opportunity. What is the TAM looking like, and how important are these launches going to be for FY28 earning targets?
So if in US particularly, if you see fluticasone 44 mcg, which we launched last quarter, it's continue to do well for us. Ryaltris relaunch is also actually getting on track. So I think the Ryaltris is this year, because we were not doing much in Ryaltris last year because through the partner one. Now we have taken that relaunch. We have relaunched the product with our own internal thing. So I think that will continue to do well for us in US. And the next half, we are expecting two more new approval. One is fluticasone 110 as well as the epratopium, and so that also will continue to do well. So all these products will have a good contribution overall this year in our this year of US revenue.
Okay, so that's with regards to Glenmark Pharma. No major moves coming in on the stock. However, markets continue to remain volatile, and we're nearly at the day's lows in terms of Nifty 50 and a lot of counters that are dragging markets lower today. But completely out of time, a thank you from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit from the NDTV Profit Suzlon studio. We'll be right back.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message...
The RBI has kept the repo rate unchanged at 5.25% while retaining its neutral policy stance. The MPC's decision was unanimous, with key liquidity rates also left unchanged. Meanwhile, the RBI has also raised its FY27 GDP growth forecast to 6.7%, citing a resilient domestic economy. The central bank also upgraded its first half growth estimates, signaling confidence in sustained economic momentum. Meanwhile, Nifty and Sensex slumped to the day's lowest points despite subdued crude prices. Realty, auto remain resilient, FMCG and bank meanwhile on the back foot. And oil prices extend their losses for a third straight session as hopes grow for a deal to reopen the Strait of Hormuz. Positive signals from the US, Iran and Qatar ease supply concerns, also adding some pressure on prices. And Castrol India shares move higher after the company reports a strong June quarter performance. Net profit surges more than 42% on a year-on-year basis, boosting investor sentiment and keeping the stock in focus. PTC India reports a sharp drop in June quarter profit, with net earnings falling nearly 50% on a year-on-year basis. Despite the weak performance, the company surprises investors by declaring a robust interim dividend of 23 rupees per share, which reflects a 13% yield. Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. First things first, and when you talk about the markets, right now you're looking at the Nifty as well as the Sensex very close to the day's lowest points as well. Whether you talk about that 98 odd point downtick coming in for the Nifty or the Sensex, which is about 30 odd points lower as well. Even when you talk about the small cap and mid cap indices, slightly a better picture that you're looking at. So just about slight outperformance coming in for the small cap index, which is up about 100 odd points, and mid cap also just about 50 odd points higher in the green right now. When you talk about the entire sectoral picture, that's quite mixed right now, but still very much in favor of red as well, because you do have Nifty, bank, FMCG, media, financial services, pharma, energy, defense, as well as IT. Also on the back foot just a little bit. What's doing quite resiliently for itself is realty, auto and PSU bank in terms of some of those segments that are doing decently for themselves. So when you talk about some of the top losers from within the broader universe, something like a CE Infosystem or a Kalyan Jewelers reacting to its numbers with that 3.5% downtick also coming in. Let's also talk about some of the Nifty 50 losers and gainers as well. So no surprises there in terms of some of your IT names also making it to the top of that list in terms of losers at least. So really 1.7% loss coming in for something like an HCL Tech, TCS, Apollo Hospital. Some of your financial services counters, the likes of Jio Financial Services or ICICI Bank, Axis Bank, HDFC Bank for that matter, also on the back foot. So across the board, there's some pain when you talk about select few sectors, and just about a few sectors that we've mentioned earlier, just holding on to a bit of resilience as we speak. Speaking of resilience, let's also talk about Nifty 50 gainers as well in terms of the stocks that are doing quite well for themselves. So it's actually something like Grasim Industries with that 2% uptick coming in. L&T also 1.5% uptick also. And when you talk about something like a PTC India as well, that particular stock is doing quite smartly for itself. And you're looking at the dividend, which is about 23 rupees per share as well, 7.5% there about uptick coming in for that particular counter, largely on the account of that dividend surprise, because the profit has actually slumped about nearly 50% on a year-on-year basis. It's actually something like a Castrol India also moving higher. after the strong first quarter as well. But let's also move on and talk about the dry bulk shipping index as well, and that's where you're seeing some action really happening. In terms of milestones as well, global shipping costs continued to climb, with the Baltic Dry Index also hitting a 3-week high. The rates were largely driven by a sharp jump in Capesize vessel costs as Typhoon Dolphin really disrupted some of those shipping areas near China as well. So freight rates, of course, have also been supported this year by continued disruptions linked to the Middle East conflict. So it's actually a culmination in terms of both of those things as well, and that's something that you're looking at. But let's also shift our focus to the key talking point this afternoon, and it's of course the Monetary Policy Committee of the RBI, which left its policy repo rate unchanged at 5.25% for the fourth straight instance. In fact, this status quo largely, of course, being penciled in also, but follows the central bank pausing on making any moves when it comes to rates on February, April and June this year. In fact, Piyush is joining in with all of those very important key takeaways as well from the meet.
RBI Governor Sanjay Malhotra has concluded his MPC statement, and here are the top 5 key takeaways from his statement. First, the repo rate remains unchanged at 5.25% and the stance remains unchanged as well at neutral. The key consideration behind the decision was the ongoing West Asia conflict and its spillover effects on India's economy. Number 2, the RBI has revised its forecast on GDP growth. The RBI has revised upwards the GDP growth forecast by around 10 basis points and now expects the FY27 GDP growth to be 6.7%. Number 3, the RBI has tweaked slightly downwards its forecast on inflation by 10 basis points, and now the RBI expects CPI to stay at around 5% level in FY27. This is of course because the crude oil prices have cooled down in recent period. Number 4, the RBI's liquidity measure, Governor said that the RBI will continue providing durable liquidity in the banking system. In fact, since the last Monetary Policy Committee meeting, the banking system liquidity has stayed in over 1 lakh crore, that sort of a range, and the call rate have remained anchored near the repo rate. Short-term yields and government bond yields have also eased after the government's measures and the combined measures that the RBI and government has taken over the last couple of months. And finally, RBI has also said that it will, introduce fresh licensing for urban cooperative banks. This measure, we have not seen the RBI granting fresh licenses over the last 2-decade period. So this is a substantial development, and NDTV Profit had earlier also exclusively reported how the RBI is willing to now open the, licensing framework for UCBs.
All right, then thank you so much, Piyush, for joining us with that. Let's also recap in terms of the conversation that Piyush had with the RBI governor as well in terms of charges on UPI transactions. Let's also go across and listen in to a snippet of that as well.
Sir, yesterday the government has made some amendments to the Payments Act. Now there is chatter that there could be, government may levy MDR on certain a transaction, whether above 2,000 rupees, or it could use that on large retailers. You have earlier mentioned how somebody has to bear a cost for this public infrastructure utility. I want to understand from RBI, will we look at transaction size? Will we target certain retailers? What is the strategy going ahead? If you can share some views on this front, sir. And last time, sir, you had said that the upper layer list of NBFCs will come out very soon. So how soon will it come, sir?
So, your first question I will answer is that it is very premature. Right now, the government is still carrying out the amendment. The costs have to be paid by someone. I mean, it's a public, we all want, that this public infrastructure should continue to strengthen, become more efficient, etc. We continue to do that. That's our primary focus as of now. Let's wait and watch for further developments on this. I don't have anything more to add.
User get charged, sir, because if you're levying a fee on a merchant, eventually it passes on to customer. So the goal is to have 800 million transactions a day or so. So imposing a fee.
Let's wait. It's premature right now.
Alright, then there you go. So that's really a snippet coming in terms of that conversation as well. Premature to talk about some of those, UPI transactions as well. That's the word coming in here. Let's also move on and talk about oil extending some of those losses. And you do have Brent slipping below that $79 a barrel level as well. Let's also pull up the oil prices and see what they're up to just at the moment as well. But when you talk about the broader trend, the losses seem to be deepening amid the diplomatic progress, as you can see on your screens. Brent very much below that $80 a barrel level. When you talk about WTI as well, below $76 a barrel at the moment as well. And lots of factors to really watch out for, and we'll get to that in just a bit. Before we do that, let's also quickly take a look at gold prices as well. Bullion also climbing above $4,130 an ounce as well. And silver also rallying over 2% on optimism. So really a lot to discuss when it comes to this conversation. Kunal Shah, Head Commodities Research, Nirmal Bang joins us on the show right now. Mr. Shah, a very good afternoon to you. First things first, just wanted to try and understand what you think about what's been happening with oil prices. It's really just been breaching some of those key support levels as well. What are the next levels that you're keeping an eye out on?
I think for WTI, the next level to watch out is $70 per barrel. And looking at the way the things are placed, right now, it seems that the likelihood of peace deal taking place between the US and Iran is high. Considering whenever we have seen the bond yield shooting up, generally Trump's always try to make a deal. And that is what has happened lately also. I think it's US is the one who wants deal more badly than the other counterparty. And looking at the scenario, because of this narrative, we are going to see some more fall. MCX crude oil can decline and test levels of 6,900. But we are not very bearish, and we are expecting, $70 will be again good levels to rebuild your inventory. So I think maximum downside is still $70, and overall it looks definitely slightly bearish in a shorter term.
Absolutely, and US President Trump really losing face as well with the war going on right now. And if you've been tracking gasoline prices very closely as well, that should also, perhaps indicate as to why that is really happening. Speaking of his commentary as well, just quickly wanted to highlight one of the factors that is very important for crude prices, right? You do have him suggesting that a breakthrough might really happen within the next 48 hours. So if that does happen, and that de-escalation, and a very big one at that, really does happen, what kind of price levels are you then penciling in as well?
I think, like I said, maximum is $70 downside, because what will happen is that the kind of inventory drawdown what we have seen from US, China, and Japan, these three countries will definitely try to make up for the inventory losses what they have witnessed in last 3.5 months, 4 months. So I think $70, and they will again, start buying crude oil, fill up their reserves, because if this escalates again, then also it is a problem. So whenever you see a dip towards 70, I think these are the countries which will be buying oil. So strong floor at $70 to $69. I don't foresee that prices will not sustain below those levels.
Right. Taken there, yes. Absolutely, point taken there. Just very quickly wanted to highlight in terms of gold and silver as well. You've been seeing quite a bit of rally, especially when you talk about silver. From a fresh buy standpoint, what are you looking at and what are you penciling in terms of the trajectory of prices here?
I think the trajectory is definitely on the upside. The rising US debt, US will hit in some time $40 trillion debt, rising debt. Second, with whatever is happening with the bond market, okay, it is indicative that whenever there is a sharp surge in bond yield, they have to print money and bring down those yields. So this is also positive for gold. Third, another round of monetary debasement is on the cards. US is likely to, print with different label going forward, liquidity management, or they will use word yield curve control, something like that, and they'll print more. From the 1st of Jan till now, the US Fed's balance sheet have expanded by more than $240 billion. So that shows, that whatever downside in gold, what we are witnessing is a buying opportunity.
Absolutely, and thank you so much for taking time out and joining us this afternoon. About $2 trillion per year is the kind of rate that, very staggering rate at which US is really adding debt as well. And that's the entire backdrop that you have had in terms of gold prices going forward. Let's also move on and talk about RD Industries as well. That's very much in focus on the back of raising 127,000 crore from anchor investors. Let's also get in some bit of perspective from the management. Nikunj Agarwal, whole-time director, RD Industries, joins us on the show right now. First things first, Mr. Agarwal, thank you so much for taking time out and joining us on the show. First things first, just wanted to try and understand in terms of Amara Raja, right? It contributes over 40% of your revenue. How do you then plan to reduce some of that customer concentration over the next 2 to 3 years then?
Hi, good afternoon, first of all, and thanks a lot for inviting me on the show. I am Nikunj Agarwal, whole-time director of RD Industries. We've been growing at 58% CAGR year on year. We've added a lot of new customers in the past few years. As on date, it stands at around 50 plus customers that we have. And we feel that the customer concentration has down from 70% to 40%. Still, in the coming years also, we feel that it's an inherent part of this industry that there are few large customers, being a commodity business. So we always focus on having key anchor clients and then followed by multiple other customers, basically. It's kind of a strategy that the industry sort of follows.
Absolutely, and point taken there. Just also wanted to get a little more color when it comes to your raw materials as well. You do have somewhere close to 87% of raw materials currently imported, right? So do you see scope to really increase domestic sourcing as well? Is that something that you're looking at? And what could that really mean for the margins then?
So broadly, we're pretty, even though import is our focus, we've still been trying to increase our domestic procurement of batteries, and with the government's tailwinds for the EPR rules and the BWMR rules, we really feel strongly going forward on the domestic sourcing that will pick up when those rules are properly implemented. Already to a large extent, they've started being implemented, and we are seeing good traction in the domestic markets where battery manufacturers are also approaching us for recycling the batteries or for EPR credits against the batteries that we've recycled from the domestic market. So we're pretty strong on the domestic market also going forward.
No, absolutely, and just about the EBITDA margins as well, they've improved from 6.1% to 12.6%, and that's just in a span of about 2 years. How much further headroom are you then foreseeing, and what do you think are the key drivers except for the ones that you've mentioned?
So we've been ramping up ourselves, from FY24, where we made only 32,000 tons of production, and now FY26 we closed at around 70,000 tons of production. So production has doubled for us. We've increased our capacities from 54,000 to 156,000 tons now as of May 2026. So we feel it's like a combined effort of multiple things, from scaling of the capacities. Our portfolio has had a healthy contribution from value-added alloys like lead antimony alloys, lead calcium alloys, and it's a strong portfolio that we're building, and it takes time for OEMs to approve these alloys. So we feel strongly that we'll sort of be able to sustain these margins.
And right before we let you go, just wanted to get some more color in terms of exports as well. They've grown significantly over the last 2 years. Which geographies or markets are you then, likely to drive the next phase of export growth in? Could you just chalk up that entire list for us?
So our key focus remains Southeast Asia when we're exporting. As of last year, we exported around 40% of our revenue was coming from exports. That's roughly about 465 crores of top line. You're right, we're growing a lot in the export side. I'll also highlight how RD Industries brand RD-led 9997 is now LME brand approved as of December end last year. So which has given us a major edge going forward, as well as it's one of the very few companies in India to have this registration, along with the already existing MCX approval that we have. And countries like Korea, Japan and Singapore are countries where they really value long-term relationships and these LME approvals, which puts us on the global quality standards basically.
Yes, no, absolutely. And thank you so much for taking time out and joining us this afternoon, Mr. Agarwal. So there you go. That's the entire expansion plan that you're looking at, the roadmap going forward after this particular fundraise as well. So you do have about 127 odd crores that they have raised from anchor investors ahead of the IPO, out of which 220 crores is going to be used for, in terms of the IPO, it's the 220 crores that's going to be used for the working capital alone and 20 crore rupees to be utilized for the debt payment as well. But let's also move on and talk about yet another counter coming in from the primary market. Molbio Diagnostics IPO is also set to open on August 10th for subscription. You do have Puneet, who caught up with the management of the company in terms of their expectations from the IPO. Let's go across and listen in.
I'm now being joined by Sriram Natarajan. He's the Executive Director and Chief Executive Officer of the company. Also being joined by Indranil Borkakoti, President Corporate Strategy as well as M&A and Investor Relations at the company. Gentlemen, both of you, thanks so much for joining in today. My first question largely being that despite having diagnostics in your name, you're nothing but a traditional diagnostic company. You do, of course, a lot of point of care. You have a platform which will help essentially in tests. You sell test kits. So just for the benefit of our viewers, if you can give us some perspective of the company and what it's all about.
Yes, Puneet, thank you very much. So just to introduce the company, so Molbio Diagnostics is a completely innovation-driven medical products company where we design, develop and manufacture high-ended, high-quality in vitro diagnostic platforms which can be decentralized and taken to the lowest levels of the healthcare chain. Why I'm saying decentralized is because traditionally most diagnostics are very highly centralized, and so the access to diagnostics to people is very limited. So we are trying to ensure that we're able to reach diagnostics to all the levels of the chain, including the remotest and primary level. This we are doing through a flagship product currently called TrueNat, which is a multi-disease platform where we can test for 30 different diseases on the same machine once it is introduced in the healthcare chain. And as you know, we are focusing on infectious diseases. And infectious diseases, are mostly curable if they are diagnosed early. But still, millions of people globally are dying because of these, just because they don't get diagnosed in time. So that is the problem we are trying to solve. And one example I'll give you is in the area of tuberculosis, where about 1 million people every year die of tuberculosis globally. In India, about 300,000 people plus are dying of tuberculosis, which means almost one person is dying every minute of tuberculosis in India. That's the kind of impact that we are trying to create, to see that these people can get diagnosed early, they can be put on treatment, so that we can first of all cure them effectively. At the same time, ensure that they don't spread TB to more people. And that's the only way you can go towards elimination programs where you can eliminate these kinds of diseases completely. So that is the strength that we have, and our technology is completely patented globally in about 110 countries. We have close to about 200 patents already. We have a very strong R&D team. So the R&D is housed in a company called Big Tech Laboratories, which is a fully owned subsidiary of Molbio. And apart from TrueNat, this R&D team is working on many more technologies that will come up as we go along. And so innovation and trying to bridge the gap in the healthcare system and try to offer solutions that can impact the global population is the mission of the company, and that's what we will continue to keep doing.
Thank you, Puneet, for having us here. And also just to add to what Mr. Sriram said and to your question about the IPO, given that we are an innovation-led company, R&D is the heart and soul of our business. So of the 200 crores that we're raising, about 105 crores is going to be invested in R&D, where we'll be setting up our own center in Bangalore, since we operate out of a leased premises currently. 72 crores will go towards automation. We have our plants which manufacture the reagents or the consumable kits, test kits out of Goa. We will be spending about 72 crores at those plants there to bring about further automation and efficiency in the system, so that we can also work on more cost effectiveness in terms of our manufacturing process.
Got it.
So the balance, as you know, is an offer for sale.
Right. I saw that, roughly you did about 1,400 crores in revenue in the last year, and that has seen a very good 40% growth from the previous year. Revenue from sale of devices as well as test kits, those are the two key main revenue drivers for you. But if you can give us some perspective of who are your essential clients, because you mentioned in your RHP that 56% of your revenue comes from central government, 23% from the state. So are these government-backed hospitals that you sell these test kits and devices to at this point of time?
So let me come here to say that we cater to both the private sector and the public health space. In the private sector, we cater to the laboratory segment, so all the pathology laboratories, right down to the tier 3 laboratories are able to use our machines. But the bigger opportunity for us comes in the public health space, because many of these diseases are huge public health problems, and the major volumes are driven by the public health programs. In the case of tuberculosis, we have a program called the National Tuberculosis Elimination Program, and this drives the entire TB testing program all over the country. And in this program for tuberculosis, we already have about 9,000 centers using our machine as the frontline test for testing for TB, because as a molecular test, this is a close to 100% kind of reliability factor for early diagnosis. Similarly, there are other programs coming up. So one is the hepatitis program, where we are looking at the hepatitis B and hepatitis C testing, also to be scaled up as a public health initiative, and also to be followed by a program for HPV testing. HPV stands for human papilloma virus, which is the cause of cervical cancer in women. So there is a huge drive to screen women for HPV so that they can be diagnosed early again and put on treatment. So these are all driven by public health programs, not only in India, but globally. And so that's why you will see that the public health contribution to our revenues will be much higher. But then these are all program driven.
Well, and with that, that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है? बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Buy now.
Sell immediately.
Hold it, boss.
Buy now.
Sell.
Hold.
Buy.
Sell immediately.
Hello and welcome back to NDTV Profit. You're watching Small Cap Buzzers. My name is Puneet Zaveri, and over the next half an hour or so, we'll focus on those key stocks. Also get you an exclusive coverage of quarterly results of Marico in just a bit. We also have another management lined up post that, so it's an exciting show. But very quickly of how the markets are shaping up. We spoke about the benchmarks this morning. It has been yet again a day we are seeing some pressure coming through yet again. 24,530 odd is where we are at. The heat map also shows you that perspective at this point of time on a bunch of key stocks for the Nifty 50. So pull up the heat map though. Let's pull up the stocks which are buzzing in trade today as well. And you've seen those signature moves come through on Grasim, L&T as well as Shriram Finance. But you've seen the tech space seeing some sell-off. So TCS as well as HCL Tech are down. Apollo Hospital, ICICI Bank are also down in trade today. But when you look at the other key aspects about sectoral heat map though, also pull those up very quickly because you have seen that within those sectors there's not been any kind of sharp runway move. While the Nifty Auto is up 1%, so is the Nifty Realty. They've had some correction and now just getting back. So awaiting the next direction essentially in this week for the markets. also pull up what you have seen in terms of the advanced decline ratio. That is the other key factor as well, because you've seen, the broader markets in this week be very neck and neck. Today also is a day where you're seeing the advances slightly inch up, but from the start of the day they have gone down a bit, and we'll focus on the broader markets as well. But Marico is the other company. Let's pull those up. So a good set of numbers from the company, but you saw the stock not reacting too much. They had almost a very strong growth in this year. Robust India volume growth as well as the premium portfolio traction have been one of the key aspects to watch. You also had indications from the management about a growth sustainers as well, but my colleague Mahima Vachharjani spoke to Saugata Gupta, who is the managing director and CEO. Let's listen to what he has to say.
Hello and welcome. You're watching NDTV Profit. I am Mahima Vachharjani, and Marico is in focus on the back of its Q1 numbers. It was definitely a strong set of numbers with India volume growth of 11%. And to try to understand as to how things are going to look like, because management has given a good guidance going forward as well. They remain constructive in terms of execution, and fewer and bigger, bolder bets is where they've indicated it towards too. To understand as to how things have shaped up, how things are going to look like, we're now joined by Saugata Gupta, who is the MD and CEO of Marico, joining us now. Mr. Gupta, thank you so much for taking out the time. Always a pleasure speaking with you. I think my first question to you is going to be about the FY27 targets that you've mentioned. I know we've talked about this earlier as well, and I'm trying to be a little greedy here because you've said in your con call that 15,000 crores ke upar you'll be able to do, right? So just want to get a sense, if you can give us some quantification in terms of how much more can you do beyond that 15,000 crore for FY27.
I think it's very early to give a number, but I think we are extremely confident of delivering double-digit growth to hit 15,000. And I think what's heartening is we crossed the 10,000 mark 2 years ago. So therefore, in 2 years we would have moved from 10,000 plus to 15,000 plus, which is, I think, one of the fastest in the industry. It all depends on how we are going to play out. But as I said, that what is important is continuing to deliver high single-digit growth, and we are lapping high. Last year also we had 8% plus volume growth. So therefore, what is most important is to continue to deliver that high single-digit growth, and maybe just like this quarter, attempt another one, or at least one more quarter, if not more, double-digit growth in a quarter.
Got it. When you say 20,000 crores by FY30, wanted to get more perspective here, because overall there has been a geopolitical situation which has impacted in terms of inflation, in terms of supply chain as well. But on the other side, you've been able to manage that very well. So considering that you want to reach to that 20,000 crore mark, do you think that is largely going to be volume driven? Is it going to be price driven? And largely, if I'm not wrong, it is going to be on account of premiumization as well.
When we take an aspiration, we take a kind of a normalized inflation. Obviously, you have years of high inflation followed by some deflation. Having said that, I think as an organization, we are also aggressively decommoditizing our entire portfolio. The clear drivers of growth is, obviously, we believe in volume-led growth, and therefore this preassumes that we should be able to deliver high single-digit volume growth in India, which is a combination of growth in the core, premiumization of the core, our entry into some of the new categories like shampoo and almond, which is expected to grow, or in cold press oil, which is again a premiumization of the core agenda, and continued growth of 20% plus in our food and digital business. As far as international business is concerned, I think we have had a great track record of sustainable, profitable growth in terms of driving double-digit growth, which we have done year after year after year. Mm-hmm. And there also we are reducing the concentration risk and driving premiumization in terms of entry into new categories. And that is something which we have been able to do independent of, the kind of adversity we have faced. If you really look at between 20 and 26, you have had 2 years of COVID, 1 year of Ukraine, then we had last year something unique to us, which was 100% increase in copra prices. So we have coped with all of them successfully, and that, I believe, is a unique capability, management capability, which we have developed, ability to cope with any adversity and having the agility and resilience to deliver consistent results.
The other aspect, Mr. Gupta, is with regards to the digital first brand that you were talking about, right? There's Beardo, there's Plix, Cosmic 4700 BC as well. They've now become important growth drivers. So going forward, what is going to be the strategy for these brands per se? Do you think it is going to be more towards increasing volumes and sales, or do you also think the focus will be on profitability? And will you be looking at acquisitions more in the digital first brand space?
I think I have spoken about this before, that we don't want a growth which is say 40-50% growth with cash burn. We want growth which is more deliberate, which is I'm happy with even brands growing at 25-30% while we continue to improve profitability. I think we should be able to exit the year close to double-digit EBITDA for the digital business. Beardo already delivers a double-digit EBITDA. We acquired Cosmix, which is a high-teen EBITDA. The acquisition in Vietnam, which we did on a digital brand, already had a EBITDA in the 20s. Plix is heading towards from a high single-digit to a double-digit EBITDA over the next couple of quarters. So I think there are multiple areas, and I think the way we look at digital brands, we see now two platforms developing. One is a BPC, or a premium personal care, beauty personal care platform, and one is a foods or wellness platform. And therefore there are a lot of synergies to be had, and there would be growth. Now, coming to opportunities, yes, we will continue to look at opportunities, but I think we have already completed a significant portion of the acquisitions we wanted to do. And we want to focus on growing them profitably, as well as continue to look for some opportunities outside. But a large part of our, I think if we call the digital chessboard, or the portfolio, has been largely filled.
In terms of ad spends, because that has gone up by 25% this quarter, do you have anything in mind in terms of how these are going to pan out for the rest of the year? Do you think that ad spends could grow from here on, considering that this is the common phenomenon that I've seen across FMCG companies, that because of ad spends going up, of course, the top line is also increasing. Any thoughts on that?
I think we have been unique in a way that over the last 4 years there hasn't been a single quarter we have cut down on ad spends to manage margins. And if you look at it, we believe that the two things we must do is investing behind long-term brand equity and investing behind talent and people capability. And these are the two things which we have never somewhere cut in, even in the most difficult times. See, I think the ad spends, what we are doing is two things. We have also taken out a lot of inefficient trade spends and other things and converted into spend behind equity. If we look at VAHO, is a classic case where we reduced a lot of trade spends at the bottom of pyramid and converted into investing behind equity in the premium part. Similarly, I think we will invest behind in the core things like shampoo, almond and cold pressed oil, and of course in our food and digital journey. So, and even in international business, there's a premiumization journey and also a deconcentration risk which we are driving from Bangladesh. So I think all this needs money. We will invest behind it, but a lot of these money will come from continuous getting out wastages, and for that we are also investing significantly in analytics, tech and AI, which takes out a lot of spends which are currently not delivering the kind of ROI.
Interesting. Because you talked about premiumization, you've also indicated in the call that you are targeting your premium portfolio to be 50% of your entire portfolio by FY30. Do you think that this growth that you're talking about for premiumization specifically is sustainable, because demand across board is mixed right now, plus on a higher base as well, right? By FY30, premiumization is going to be on a high base as well. Just want to get a sense of the dynamics of how do you think that this will happen, considering the way demand has panned out so far?
Look at the entire premiumization agenda. We are challengers everywhere. So therefore, there is market share to be grabbed irrespective of whether the category grows or not. Look at value-added hair oils. Our value share is 29, and there is no reason why there is a pathway to 40 over the next 3 to 4 years. I think shampoo again is a 10,000 crore plus category. We are premiumizing in cold press oils. And as far as food and digital brand is concerned, I think all this entails is actually a growth of around 20-25% every year, which is very much possible.
And what is the response that you've seen in terms of shampoos?
It's an encouraging start. I think we'll take 1 year at a time. And as I said, that if we can do 100 crore in the first year, it's a good thing to start with.
Okay. All right. Just, one last question in terms of your FY30 targets, because that again, kind of indicates the transformation that, throughout, Marico has seen. Just want to get a sense as to what are the key milestones that you'll be watching out to reach to that 20,000 crore by FY30?
First, obviously, we have to keep on growing at a double digit in revenue, which means that a double digit growth, constant currency growth in international business, high single digit volume growth. We are looking at the numbers as far as the diversification agenda is concerned. I think it should get into 30% plus. And I talked about the food and the digital part of the business growing at 20% plus. And I think one of the other things is continuous mix change, so that we are consciously making a call to deselect, categories or parts which are actually not sustainable in terms of below the threshold level of profitability, and also decommoditizing the business. Having said that, I think distribution is becoming a big part, and our investment behind digital and tech capability in the organization is also going to be a big part of our entire journey.
All right. Mr. Gupta, thank you so much for taking out the time and always, being so candid with your answers.
Sure.
Well, that was the management of Marico. Of course, a lot more conversation we'll take forward with individual stocks as well. But let me welcome in Shashank Udupa. He's the founder at Vayu Capital, now joining in. Shashank, a very good afternoon to you. Thanks so much for joining in. Just the first question, because we've seen, of course, companies like Marico continue to perform well. Within that space, is there anything that you like?
So yes, I think it has been a consistent compounder for a very long period of time, and they have been giving good growth across the industry, right? And I think the CEO just mentioned that they're now going to focus more on the profitability end, and they're not going to focus on things that are not doing well in their portfolio. And they've also acquired a lot of different companies, which are new age right now in the consumer trend, and also quick commerce revenue has gone up quite a bit. So I think overall it is bullish. Yes, the raw material prices because of crude oil spikes for paraffin and HDPE has actually gone up. But I think over a long period of time, there's nothing to worry about.
Got that view. But let's also focus on Mangalam Worldwide now, because, company came out with its results in the last week, has been in focus as well. Stocks done well, gained over 20% just in the last 3 sessions. But it's a good time to talk to the management as well. Let me welcome in Chandragupt Mangal. He's the managing director of Mangalam Worldwide, now joining in. Mr. Mangalam, thank you so much for joining in. It's Puneet this side. Just a question on this quarter. You saw good growth coming through. Revenues were up almost 20% on a quarter-on-quarter basis. How much of that has been led by volume growth in this quarter, and how much has been led due to the price increases that we've seen for steel, amongst others?
So I would say there has been two things due to which the revenue has increased. So one is definitely like what you just said, that the increase in prices of steel. And the second is, as a long-term strategy, what we are doing is we are going more into value-added products, which is we are moving up the value chain. We are a fully integrated facility where we are doing the melting, we are doing rolling in-house, then we are doing finishing of bright bar in-house, and we are then manufacturing seamless pipes and tubes. So as a part of long-term strategy, we are increasing the share of our finished products, which is the bright bars and also the seamless pipes and tubes. So it has been a two-factor thing, increase in the prices as well as increasing the share of the value-added products.
Got it. So definitely the finished product share is something that you're targeting as well. But Mr. Mangal, how much was in this quarter, when you look at this revenue performance as well as this margin performance as well? I'm sure there was some lag effect and hence they're down on a quarter-on-quarter basis. But how much of the revenue growth has come through led by volumes?
By volumes, you mean the volume of the value-added products, right?
Yes, so the volume actual growth that you've seen in this quarter.
So the value-added products, what we have increased the volume share in our company is from, you can say we were earlier doing around 30%, which has now gone up to 40%.
Okay, got it. So from 30, you've gone to 40% in terms of value-added products, got it. And in terms of what we have seen, that the margins, they were impacted on a quarter-on-quarter basis. Was this largely because of pricing action that you'd seen, or was there any particular other raw material for you that had also inched up and hence the impact?
So as part of the long-term strategy, we are also constantly working on the operational efficiencies as well as increasing the capacity utilization. That has been a key aspect, as well as our share increase in the value-added product has also given us a boost.
Got it. Also, Mr. Mangal, you mentioned that, and in terms of the growth, when you see of the last couple of years, you have been in that range that of roughly around 1,000 to 1,200 odd crores. Where do you expect FY27 to be? Should we expect 14 to 1,500 crores in terms of revenue as a profile that is sustainable at this point of time?
Yeah, we're expecting around, we can say, somewhere between 10 to 15% in the revenue growth.
Okay.
But there will be better growth in the EBITDA margins. That's what we are looking at. Since we are consolidating, going more into the value-added items, focusing more on the costs. So that is the focus for this year.
Okay. And how do you look at the margins as well? Because you mentioned a 10 to 15% growth. So you did about 1,200 odd crores. So definitely 1,300 to 1,350 odd crores is the minimum revenue that you will be at the end of the year. How should we look at margins? Because last year we did see that meaningful margin uptake going to that 8 odd % mark. Do you feel that you will bake into that growth, or is it visible that jump that we saw from FY25 to 26, will that also be visible here, or you'll see that stabilization as of now between that 8 to 9% mark and then follow through?
Yeah, the EBITDA margin, we expect it to be at a stable level from 8 to 10%. Definitely the goal and target is to increase, which it will be. But I don't think that what we're saying that substantial increase is expected this year.
And just what is the capacity utilization as of now for you in your current plants? Is there any that you have already invested in over the last couple of years where the utilization is ramping up, and anything on capex that you can offer?
The average capacity utilization of all our integrated plants, all our facility comes to around 80%. What we're trying to now do is, like I said, going forward in the capex side also, would be more into the adding capacities in the finished products, which will be the bright bars as well as the seamless pipes and tubes.
And that capex has already happened, or that will be happening in those products?
So we are seeing good demand of our products. We are going into end user market, the approval base, where we are procuring approvals from companies like BHEL, L&T, EIL, and all these companies. Also, we are increasing our market share in the exports. So what essentially capacity is getting utilized, the idea is to invest more and more as and when the capacity is utilized.
Got it. Well, Mr. Mangal, we leave it at that. Thanks so much for joining in, giving us your views on the results as well as the strategy going forward. Look forward to our next conversation.
Thank you so much.
Well, Shashank, let me come back to you very quickly as well, because within the commodity side of things, we've seen multiple key winners over the last few months, led by price increase, led by volumes as well. Does Mangalam Worldwide focus and come back into that list, or are you preferring the larger players for now?
I mean, the commodity cycle is doing well. I think for people who are in that cycle, I believe that it should go on for another maybe year. But yes, these are very cyclical sectors, so we should be very careful about that. One interesting thing also is that Mangalam board has recently approved a borrowing limit of 2,500 crores. So that would be very interesting to note as to what are they going to plan with that excess borrowing limit. And will they over leverage, or will they leverage to a point where the revenue start flowing in as well? So that is something we need to look at. But I think the last 1 year performance has been good for the company.
Got it. Let's quickly look at Jai Bharat Maruti as well and pull up that counter too. Because that stock has hit an all-time high in July. You've seen that peak coming through, and today the stock's down 5%. Could be on the back of results, because while we have seen revenue growth in this particular quarter at 623 odd crores, you've seen the margins actually go down. So EBITDA margins are at 10.06 versus 12.05. Also seen the net profit being largely flattish, and hence, despite the up move that we saw at the start of the month, for the month of August, at least you've seen that correction come through. Now, they had mentioned, and the reason for the July up move was that almost the 170 odd crores investment that they were doing in the Kharkhoda plant that was led by the growth that was seeing for the primary customer Maruti Suzuki, and that 70 crore investment is in phase 2 is something that they're watching out for. So that led to the up move. Newer partnerships between India and Japan as well was another key trigger. But for now, stock continues to be under pressure as well. But Shashank, on this particular counter, would you venture in buying at the current price? Because we've seen, of course, that correction come through, but there has been a sharp run up before that.
Yeah, I think things are normalizing right now. So if you look at the last 3 to 6 months, we had the GST rationalization where all auto companies and auto ancillary companies did very well. And obviously, if you looked at Maruti Suzuki's numbers and the units that they were selling, they were doing a very good job. And I think right now, even with Maruti's result that you see, we are seeing some normalization kick in, which basically tells that the next few years of growth might not be as big as the base that was there before, right? So I think the growth premium is slowly going down. I'm not saying that the fundamentals might not be great, but I think the excitement factor is slowly going away. And if you look at companies like Jai Bharat and even NDR that is in the same space, they're mostly commoditized players, right? It is not something that they have a very big, unique selling point that they actually do. And they're joint at the hip with Maruti. So I think everything depends on how Maruti performs. But yes, I think even though Maruti is growing, I think the growth premium is slowly going down right now with Jai Bharat.
Got it. Let's also look at RD Industries also. That's another counter that's in focus. We actually had the management in the previous show as well, but Parth is now joining in to get us some more perspective on this counter. Parth, what should we watch out for?
Well, the key trigger in RD Industries IPO is that the company has raised almost 128 crores from anchor investors before its IPO, and a big name has appeared in that anchor list, and that is the ace investor Ashish Kacholia. He has picked up 19.57% of the total anchor allocation for an amount of 25 crores. So that is going to be a key trigger for this IPO going forward. If you talk about the details, then the total issue size is 426 crores, out of which 320 crores is a fresh issue, and there is an OFS of 106 crores as well. The 226 crores from the fresh issue will be used for working capital purposes, while 20 crores will be utilized for debt repayment. Now, if we understand the business model of the company recycles lead acid batteries into high purity lead. They serve various sectors like energy storage, e-mobility, automotive and chemical sector as well. They have an integrated recycling capacity of almost 1.57 lakh metric tons per annum, and that is located in Tirupati. The company sources scrap from around 58 countries, which makes them import 87% of their raw materials. So that is going to be a concern there, because they are so much import dependent on their raw materials. And also there's one more concern, that Amar Raja contributes to more than 40% of their FY26 revenue. So that customer concentration risk is going to be there here as well. Now lastly, if we talk about the financials, then revenue has grown at a CAGR of 58.8%, while PAT has grown at a CAGR of over 200% in the last 3 years. Margins have nearly doubled in the last 2 years, while exports have grown at a CAGR of 139% as well. So a solid anchor book and solid financials as well, and that's why Street is very excited for this IPO.
Got it. Thank you so much, Parth, for that view. So, of course, a big name coming through in that aspect. But Shashank, we'll let you go on that note. Thanks so much for joining in and giving us your perspective as well. Viewers, out of time on this edition of Small Cap Bazaar. Stay tuned though. Ask Profit comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P Mark, the mustard specialist since 1933.
सरसों से सरसों।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
याद है ना मैंने क्या
सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों. कुछ तो बात है इस दिल में.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
Welcome back. You're watching Ask Profit, the afternoon edition with me, Puneet Zaveri. Over the next half an hour or so, we'll try and solve all your stock-related queries. So if you haven't already done so, send us your WhatsApp query on the number flashing on the screen. Also call us for your stock-related queries. It's the landline number that you can call us. That's also flashing on the top of your screen as well. But before we do that, a quick check of how the markets are doing. We spoke about the pressure that was visible on the Nifty 50 just half an hour back. So pull up the advanced decline ratio and let's get an update of what that is coming through, because while you have seen majorly the advances dominate the day, 1.5 to 1:2 is the ratio, but you're seeing that starting to come down a little bit. So the last 90 minutes of the trading session becomes very important. Pull up the mid cap and the small cap too. That's something that we missed on to look at half an hour ago. Has been largely a day in the green for the mid cap 150, but just up 0.12%. The small cap 250 is up 0.6% right now. And in terms of the individual movers, yesterday you had a bunch of them reacting, the likes of Ather Energy amongst others on results. Today as well, PNB Housing is one of those counters that's doing well on the back of its quarterly results. Varroc Engineering up 6.7%. While Kansai Nerolac is continuing its bullish momentum post-reporting results in this week as well. Up in the losers though, CE Infosystem had largely a flattish quarter, seeing the stock down almost 6.5%. Kalyan Jewellers also not getting too much of a boost as of now, at least from its quarterly results. Metro Brands, we spoke to the management today, also down 4.2%. But let me welcome in our guest for the show, Rahul Sharma. He is the Director, Head Equity Research at Equity 99 Investment Advisors. We also have Nandish Shah. He is the AVP Research and Advisory at Motilal Oswal Financial Services. Gentlemen, both of you, thank you so much for joining in today. The first question coming through, and this one is on Kaynes Technologies. The results also in this week, so very important one for the company. Our viewer actually bought these shares at 3380. And this is Rajiv Mukherjee, who's from Bengaluru, wants to know about this counter. He's sitting on massive gains as well, and asking what he should do with this counter now. Rahul, very good afternoon to you. How are the charts looking at this particular counter? Would you recommend him to book his profit just before the results, or probably take a look and then take a call?
He should wait for the results out, and because this particular season is morely based on how the numbers are playing, so I think he should wait down for the numbers.
Nandish, if you also have an opinion, because Kaynes Tech definitely had some a weaker Q4 numbers. There were cash flow concerns. How are you looking at the expectations now, because it's already back to those levels pre-correction essentially? How are you looking at it?
So we have been very positive on Kaynes, and we are aware of the issues which especially the cash flows issues. But the management has even promised that that slow and steadily these cash flows issues will get resolved. And one of their big business, which is the smart metering business, is facing that issues. And what is slow and steadily that business model is getting changed.
Got it. The next question coming through, and viewers, you can also call us for your stock related queries as well on the landline number. Vanita from Mumbai has actually bought into DCX at 174 odd, asking if she should still continue to hold this counter or sell out. Rahul, on the charts, anything visible that in terms of momentum continuing right now?
See, the momentum has been a little slow. From the starting of the July month, we have seen a quite decline in this stock, and from last 5 to 7 session, it is consolidating between 185 levels on the upside and downside, I think at 177, 176 levels. So I think if at all 177 or 176 gets break down, the stock can see on like further downside. So I think she should hold on with this strict stop loss level placed at 177. And if at all the stock goes above 185, it can reach towards 190, 192 levels.
All right. Well, Raj, who's from Delhi, also has another question. The question being, what would be the top 2 picks right now, Rahul, on the charts that you are picking up? Anything that you like?
Yes, Puneet, definitely. First of all, this Vedanta Iron and Steel Limited is my selection. It has delivered a strong start as a listed company of Q1. With revenue rising 18%, EBITDA growing by 54%, EBITDA margin expanding by 14%, which was earlier 11%, and reporting a profit of 121 against a loss of 145 crores last year. So I think this is a great selection to get into. Even the CRISIL, which is a rating agency, have rated it as AA stable. So looking at its long-term growth strategy, I think this stock looks good. Technically, the stock has shown good support near 30 levels, which will act as stop loss, and upside long-term journey can continue towards 60 and 70 levels. Second selection is slightly uncommon name, but Azad India Mobility Limited, which is AIML. It is an Indian manufacturing specialized in electric buses and coaches for urban and intercity transport. The company has been working on reducing its debt. With new orders in line, company shall deliver good growth. And now, as they have diversified business towards EV playing theme overall, I think the stock can show us good rally on the upside. The technical charts. On the technical chart, the stock is maintaining its rounding bottom formation, and as soon as it crosses 103, 104 levels, a massive upside is possible. So SL should be placed at 85 levels for the upside journey.
Got it. Well, a very, very smaller name, Rahul, that you picked out, roughly around 520 odd crores in terms of market cap for Azad India Mobility Limited, but that's the expert opinion coming in on that technical pick. Let me go across to Mysuru now, though. Mohan, who's a regular viewer of the show, joining in for a stock-related query. Mohan, very good afternoon. Thanks so much for joining in yet again. What's your query?
I've got TVS Supply Chain Solutions, 76 shares at the rate of 197. I just want to know, I'm holding this share from past 3 years. I just want to know what your long-term perspective.
Long-term perspective. Got it, Mohan. Nandesh, I don't know if you have coverage on TVS Supply Chain, but has been an underperformer since its listing. Any view that you can offer, Mohan, right now?
So TVS Supply Chain is not under our coverage, so I won't be able to offer any views on it.
Anything on the charts, Rahul? We've seen a pullback from that 101 odd level, but what would your opinion be?
Yes, definitely. The stock has been pulled up from those levels, but on the upside, there is a resistance which is placed at around 140, 142 levels. And we can see a quite consolidation between 135 and 142 on the upside. So although the stock structure looks good, or it is moving above from all the averages. So I think the stock should be kept on hold for the further upside. If it breaks resistance above 142, 143, you can see a jump towards 150, 160 levels.
Got that view, Rahul. But the next question coming in from Sriram Raghuraman, who's a senior citizen, holding on to 600 shares of Samvardhana Motherson, bought at 75. So he's essentially up 100% from his buying price. Wants to know a fundamental opinion on the stock now. Nandesh, we've seen, the consumer electronics and the newer business come through now. Would you recommend him to continue holding, probably ride the wave on this one?
So he should, ride this wave, and we have been very positive, especially on the auto ancillary space. And Samvardhana Motherson Sumi is our preferred pick. So if he's looking for a longer term view, he should continue to hold it.
Got it. Next question coming through, and it's on Marico. We just had the management in the previous show, and Prakesh, who's from Kerala, actually bought it at 851. He wants a short-term view here, Rahul, and he's holding on to actually 1,000 odd shares. Today we've seen a correction, but results were largely good. Anything on the charts that's visible that momentum can come back?
Yes, momentum can come back, Puneet, definitely. The moving averages of 200 days or even the 89 days of weighted moving average is around 830, 835 levels. So the stock has got good potential to sustain these levels. And with the results are positive. So I think he should hold on for the upside target levels of around 950.
Got it. The next question coming through, and this one's on BSC. A viewer is asking if it's a good time to enter this stock right now. This is Suresh asking this question. For the next 1 to 2 years, Nandish, we had the results today of the count on BSC 2. How are you looking at BSC, and is it a good entry point now?
So currently on BSC we have a neutral view. And it seems that in next couple of months we are likely to get the NSE getting listed on the stock exchanges, and which would directly impact BSE in terms of volumes, being a market leader. So if he's looking for a longer term view, it is better to wait for a correction to enter into BSE, or we need to see how it behaves once the NSE gets shares listed in terms of volumes and market share.
Most certainly, and that will be a big event this year, of course, the NSE IPO. But another caller now, and Shrinath is joining in for a stock-related query. Shrinath, very good afternoon. Welcome to the show. What's your query?
Yeah, good afternoon, Puneet. I think it's been a while I complimented on your suit, but this one looks mid. It is not your A-type suits for sure. So,
I wish you would have called in yesterday. I was wearing a good one yesterday, but go ahead with your stock-related query.
My bad then. So I am looking for Manipal. I just got the IPO 325 shares at 590, and I'm not sure if I should sleep on this or if I should just check on it on certain levels and take partial money at maybe like a 20% or something like that. So I just want a view on that.
Got it. Well, I don't know if Nandish, because the stock just got listed today. I don't know if you have an opinion on Manipal, but if not, just on the space, how are you looking at it? Because even though there was some elevated valuation, complete OFS, the street's actually taken it well, right? Nandish, how do you look at Manipal Hospital or just the space as a whole?
So on the hospital space as a whole, we have been very positive, and Apollo and Max and Fortis are already there in our coverage. We also had a subscribe rating on Manipal Hospitals, and it is a good bet to keep it for a longer period of time, at least for next 2 to 3 years. We see that most of the greenfield expansion is likely to come in the next 6 or 8 months. So if he's looking for a longer term, Manipal is a good hold, or it can be even added in case there is a correction in it.
Got it. Well, the next question, this one is on LTF Foods. Sandeep, who's from Delhi, holding on to almost 975 shares that he's bought at 240. So I had bought at very attractive levels. Rahul, his question being if he should book out his profits now, would you recommend that?
No, I think there is a quite chance of getting more good value. At current levels, yes, it has been consolidating from quite a long sessions, but we have seen upticks towards 425, 426 levels. So I think he should hold on. If at all there is no such requirement of liquidity, definitely he should hold on. I think very good numbers can lead this stock towards 500 odd levels.
500 on LT Foods, got that view as well. But let's go across to another caller query from Chennai now. Dheeraj has a stock query for us. Dheeraj, what's your query?
Yeah, hello.
Yeah, Dheeraj, I can hear you. Go ahead.
So I got 50 shares of Aether Energy at 400 rupees.
Okay.
And I was thinking if now is a good time to accumulate more.
Okay, you want to accumulate more. Got it. Well, and Dheeraj, did you buy this just after the IPO, or did you get allotment in the IPO last year?
Just after the IPO.
Well, firstly, many congratulations. It's turned out to be a great pick for you, Dheeraj. But Nandish, on Ather Energy, he's sitting on almost tripled his money now in the last 1 year. Would you recommend venturing now yet again to buy into this counter? If you have coverage, any view on this one?
Officially, we don't have a coverage on Ather Energy, but whatever we have read and the recent fundraise which has happened in Ather Energy, it reiterates the confidence in the electric vehicle space, and Ather Energy being a market leader, especially a sole listed player completely into electric vehicles, makes sense, and he can continue to hold, and at these levels he can even add.
Got it. This query was also by Ajay Kapoor, who was asking this particular question, but and hopefully that gives you an answer as well. But the next question from Jay, who's from Tirupur, wants to know between HUL or Jyoti Labs, either of those counters he can enter right now. How are you looking at this one, Nandish? Because for Jyoti Labs, we saw that massive correction on the stock because of that partnership with Henkel that got void. For HUL also, you've seen a correction post results. Do you like either of them in the space, or what's your preferred pick?
So it is better to stay with the leader, and HUL being a market leader in most of the categories they are present in, it makes sense to enter into HUL rather than into a mid cap or a small cap company like Jyoti Labs.
The next one and the next question coming in, and this one's on SRF. Dilip, who's from Kolkata, has actually bought 10 shares at 2,634, so very close to the current market price. Rahul, his question being, if we can add more at this juncture, what would be your opinion?
His entry point is quite similar to the current market price, and the chart structure is somehow weak, with the support levels currently at 2600 levels on the downside. So keep a close watch. If at all these levels are breached, stock can see a further downside towards the 2380 levels.
Got it. 2380 levels will be something to watch. The next one, and this is from the real estate pack, has done well today, the top gainer in terms of sectoral impact. A fresh entry into Sobha, if it's the right bet from Mr. Rao, is what his question is. Nandish, would Sobha be in that top list? Is it a good time to buy in the real estate space now?
So we had recently upgraded the whole real estate sector, and our preferred picks are Lodha, DLF, and Aditya Birla Real Estate amongst the mid cap.
Got it. Amongst the mid caps. Okay, got it. The next one coming through, and we spoke about BSC, but Grow is the other counter that Dr. Raj Kumar wants to know if it's a good one to continue holding at this point of time. What would you recommend here, Rahul?
No, I think he should definitely hold on. Although the structures are not but I think Grow is something which has been growing in terms of its business very largely. So I think this stock should be kept in a long-term portfolio, definitely.
Got it. Next counter, and this is from Murthy, who's from Vizag. He wants to know about Moltech Packaging and if it's a good counter to enter right now. Rahul, anything on the charts that suggests the same?
For Moltech Packaging, currently at 685 levels, the chart structure is positive, and I think the upside level of 720 will act as a resistance, because we have seen multiple times it has tested it, and if at all it breaches, the stock is poised to deliver good growth. So I think he should hold on. On the downside, we have a good support of 200 EMA and 100 EMA, quite below around 650 levels. So hold on to this stock with the upside potential of around 780, 800 levels.
The next question, this is from Mr. Sugunakar from Vijayawada, wants to know about Ujjivan Small Finance Bank and if it's a good time to enter this counter now. Nandish, not sure if you have direct coverage, but within the small finance banking space, anything that you like?
So Ujjivan Small Finance Bank is not there in our coverage, but amongst this pack, we like AU Small Finance Bank.
And what could be some targets that you're watching out for, and for how long? What's the duration?
Yeah, for AU Small Finance Bank, the target duration for the next 1 year is is about 100 rupees from here, at least.
Got it. The next one coming through, and this one's on Vikran Engineering. He's bought these shares, our viewer, at 90 rupees. Wants to know about his 3,300 shares and what should he do with this counter. How are you looking at the charts here, Rahul?
See, the chart structure shows us a major consolidation, and this consolidation has been in this counter since April and May month. So I think we have to wait furthermore. If at all it rises above 78 or 80 levels, stocks can show upside rally. But on the downside, the risk is limited at 66, 67 levels.
Got it. The next one that we have, this one's a smaller name actually, KMC Specialty Hospital. Sunita, who's from Hyderabad, wants to know a good entry point for this counter. On the charts, Rahul, anything that's visible? I don't know if you track this counter, but anything that you can spot right now?
No, I'm not tracking it, but I can see the chart structure earlier in the May month or the end of the May month, or you can say the starting of the June month. The stock has rallied really decently from the levels of 97, 98. It has shown an upside of around 140 and currently consolidating between 123 and 135 levels. So the quite support, which is 89 days of weighted moving average, is placed at 120. So it should be kept with this strict stop loss of 120 levels. And on the upside, I think this stock, if it all breaches 142 upside, it can show us a rally towards 150 plus levels.
Got it. Well, we'll continue with your stock related queries, but an important story, because sources are telling NDTV Profit that SEBI has concluded the first round of discussions with qualified stockbrokers. Let's get in my colleague Nimit. Nimit actually to tell us more about this. Nimit, over to you.
Yeah, so what we're hearing from sources is that a meeting has concluded. We were tracking this meeting that was held earlier today, where SEBI has met with top stockbrokers to assess what is happening with the investor awareness side and how they're sort of implementing the new CAS process on their different platforms. Now, with these qualified stockbrokers, the SEBI has concluded its meeting, and this first phase of SEBI discussions has come out with the key conclusion here that there needs to be more needs to be done for investor awareness here, and the qualified stockbrokers have sought 2 to 3 weeks to complete front end integration on their apps for retail participation. Remember, the key here is increased retail participation, and stock brokers are requested to work with other parts of the system here and manage and increase retail participation, improve retail participation. Remember, we had reported earlier that SEBI is saying that the volatility is because of this lack of a deep volume-based participation in the CAS process, and once that happens and once there is a deeper pool of investors participating, the volatility itself will fade away.
Well, thanks so much for that, Nimit, and getting us that breaking as well. But just one quick question coming through from our viewer, and this one is on Azad India Mobility. What's your view on this, Rahul? I think you spoke about it as well, but anything, what could be a stop loss and a target to watch out for?
Yes, definitely. See, as I saw, Azad India Mobility, it's a specialized manufacturer of electrical buses and coaches, and I think EV is quite playing till now, and further more upticks can be seen from this sector. As far as charts are concerned, on the technical side, I think a rounding bottom formation is continuing, and as soon as it crosses 103, 104 levels on the upside, a massive move is possible. Stop loss should be placed at 85 levels.
Well, that was the last question today. We are a little short on time, so we'll probably take the rapid fire round tomorrow as well. But Rahul as well as Nandish, thanks so much for joining in, giving us your views across a whole bunch of stocks as well as spaces. But viewers, out of time, India Market Close comes up next. Thanks so much for watching.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ
केसरी त्योहार विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
द मस्टर्ड स्पेशलिस्ट सिंस 1933 बरसों से सरसों। कुछ तो बात है इस दिल में।
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew and with me is Mahima Vachajani. We're coming to you live from the NDTV Profit Suzlon studio. It's a day of consolidation for the large cap end of the market. The broader end is actually looking pretty robust. But we've traded in a range of about 170 points for the Nifty 50. We did start in the green, but we gave up that ground quite considerably over the course of the day. We are trading very close to the low point of the day, but it makes sense this week in particular to not focus too much on the percentage change and to focus rather on the level that you should that you can see. So 24,500 is what you should pay attention to. Similar case for the Nifty Bank because of the kind of volatility that we've been seeing with the cash window or the closing settlement that we've seen or the closing prices that have been arrived at on account of the new change that we've seen. So 57,535 is what we're seeing for the Bank Nifty. And let's take a look also at the heat map for the Nifty 50 because that's going to tell a story. Midway through the session, it actually flipped the script. So at the start of trade, it was even Stevens between green and red. Now you have more red on the screen.
Yeah, and you know counters which did see volatility on account of the closing auction settlement are seeing action today as well. Right, you have Grasim, which is the classic example of that, up 2.4%, followed by something like a Shriram Finance. Though Shriram Finance has been doing well for the last couple of days, JSW Steel, in fact, metal as a pack is back in action again in terms of relative strength as well. L&T also doing fairly well, and and of course you have names like HDFC Life and Hindalco. But on the flip side, you have your IT names. HCL Tech and TCS both losing grounds, almost 2% each. You also have Apollo Hospital, which continues to be under pressure. Names like, and because of RIL, of course, a heavyweight being under pressure, you're seeing that pressure coming on the Nifty 50 as well, as Alex pointed out, because at the day's low point as well. But I think the contribution will also be interesting to watch out for.
We should look at the contribution.
That will give you a better picture as to what is exactly weighing down. So again,
all the heavyweights.
All the heavyweights, HDFC, ICICI, Reliance, and on the flip side, of course, you have smaller names that we talked about doing very well in trade.
L&T is actually doing pretty well, one of the top gainers on the Nifty 50 as well, and a reasonable weight, so therefore it's able to move the needle more than certain others, like Grasim, for example, that's contributing about 6.7 points on the upside. Let's take a look at the sectoral heat map, because at this juncture you will notice that the small cap index, which should feature in the top somewhere, there it is, the small cap 250 up about 0.7%. So the broader end of the market is actually doing well. We'll get you the advanced decline ratio in just a bit, but that will tell you that the gap has narrowed. We're still seeing strength in the broader markets though. Realty as a pack was doing badly yesterday, it's doing well today. So that script has gotten flipped. Auto as a pack has actually done pretty well in the recent past, and that continues. Metal, on account of a couple of base metal names, aluminium names, they're actually doing well, right? And that thesis or story is intact, and it's actually a broader theme, not just based on what you're seing here in India.
Agreed, and like you said, right, so there was buying action seen in metals across the globe, and which is why you're seeing that uptick coming in. All your names, Hindalco, Hindustan Zinc, etc., all are doing very well. But let's also try to see the broad end of spectrum. As Alex mentioned, the small cap 250 just 1.5% away from the life high point. So we'll have to see as to when that is being crossed. The mid cap 150 almost flat now, has come off from the day's high point, but small cap 250. In fact, small cap names are seeing very good buying action coming in. Clearly outperforming the benchmarks as well as the mid cap 150 up by about 0.7%.
We should look at the advanced decline ratio, because you will see a narrowing of the gap between advances and declines over the course of the day, but you still have advances that are in the ascendance. You should look at individual counters as well.
And this is on account of the mid cap index, because it's come off quite significantly from the day's high point. But the BSE 500 quickly, if we can, and again yet another day of stock specific action, earnings specific action is what we're seeing. On the green side, you have something like a PNB Housing topping that chart, up 7.7%. Westlife, QSR pack as a whole has been doing very well. It'll be interesting once Jubilant Food numbers come out to see as to how volumes have grown, how the store growth momentum has picked up in these names. Something like a New India Assurance, VAC Engineering, Kansai Nerolac, all of these on the back of Kansai Nerolac, especially on the back of numbers doing very well. They posted numbers on Monday, but since then doing very well. But on the flip side, you have something like a Vaibhav Global, C Infosystems, Z Entertainment, which continues to be under pressure. Metro Brands, not a very very good quarter per se, but has done fairly well. But Kalyan Jewellers is the other one where we've seen significant amount of buying coming in, but post the numbers, it's seeing profit taking coming in, down by about 3.8%. Sugar stocks are also seeing profit booking coming in today after 2 or 3 days of rally that it's seen. So Balrampur also down by about 3.6%. So that's Alex, with regards to how the broader end of spectrum goes.
Okay, all right. So that's the picture of how the markets are looking right now. Beyond the way that the equity markets have moved, you should also pay attention to the RBI monetary policy and the impact that has had on the money markets as well as the currency markets. So pull up the USD INR if we can right now, just to showcase where things are. Earlier on in the session, in fact, at the start of the trade today, it was very close to the 95 mark. It slipped just a tad bit, and it's currently trading at 95.17. There was quite a bit of commentary with regard to the RBI's measures that have been taken to stem the tide that you've seen and stem the depreciation of the rupee. It hasn't necessarily moved as much as some people had thought, but then some important updates coming through. First, let's talk about the key takeaways from the RBI MPC meet. First and foremost, you have the fact that the MPC members unanimously voted to keep the policy rate unchanged. Not just that, and that repo rate therefore remains unchanged at 5.25%. Not just that, and this is something that will affect the course of monetary policy going forward, the MPC has maintained the neutral stance. Essentially, what that means is that their stance is neither accommodative, which would indicate the possibility of a future rate cut, or on the other hand, it's not a tight stance or a hawkish stance. That would indicate the possibility of a near-term increase in rates. It's neutral as things stand right now. FY27 GDP growth is projected at 6.7%. This is an increase of about 10 basis points. Just a tad bit of an increase. On the flip side, the FY27 CPI inflation, that's a retail inflation projection, that has been pegged at 5% for the full year, and 5.1% was the earlier target or the earlier expectation. So it's been brought down just a tad bit because of the fact that the first quarter inflation had come in a little bit lower than was previously anticipated. But more importantly than that headline number, and something that the RBI pays attention to, is that core inflation is expected to come in at 4.3%. What is core inflation? Essentially, if you look at the CPI basket and you remove food and you remove fuel, whatever remains is called core inflation. And this is important to understand because food and fuel tend to be very volatile. There was also a comment that was made on FCNRB deposits, and the RBI governor saying that as things stand right now, there is no proposal to stem that flow or to close that window earlier. As per the last available disclosure, as much as $40 billion have already been mopped up by those swap windows, and the RBI says that it will allow it to keep coming through. So that's certainly something to pay attention to. It has had a bearing on the money markets as well. I'm joined right now by Nilesh Jain, who's the head and AVP Technical and Derivatives Research at Centrum Broking, as well as Sameer Dalal of Natverlal and Sons Stockbrokers. Gentlemen, thanks so much for taking the time, and good afternoon to the both of you. Let me start, Nilesh, with a check with you on where the benchmarks are right now, where they're headed in the near term, and whether or not you would be you would suggest a long position as things stand right now.
Very good afternoon to you, Alex. Good afternoon, everyone. Well, in last couple of trading sessions, we are witnessing some bit of consolidation where earlier we saw Nifty face resistance at its 200 long-term moving average. Resistance is currently at the levels of 24,770. And it is important that Nifty should break that barrier. Then probably we can expect a move towards 25,000. But as of now, we are expecting Nifty to trade in a range. The broader range looks like 24,300, 24,700. That's the broader 400-point trading range. And stock-specific action is something that we are focusing as of now. On index front, we expect both Nifty and Bank Nifty to consolidate in a tight range.
Okay, all right. So, and Nilesh, what about your picks for the day? What will you be going ahead and buying? And I suppose it's buying.
Right, I have a couple of buy recommendations. First of all, ITC Hotels. This particular stock has rebounded sharply from the lower levels, and the structure is looking positive. We have also witnessed a strong rebound and a breakout as well from the levels of 168. So we are expecting a move towards 175 on the upside, followed by 178. The stop loss can be placed at 164. So 164 should be the stop loss. 175, 178 are the two targets on the upside. Another buy recommendation that's on Dixon Technology. This particular counter recently tested its 21-day moving average and also trading well against all long-term and short-term moving averages. We are expecting a follow-up move on the upside towards 14,600, and the stop loss can be placed at 14,100, and Dixon Tech is a buy.
Can stock, Nilesh, can you repeat it, please? Dixon Tech, right?
Right, Dixon Technology.
Okay, all right. By the way, Whirlpool has just posted numbers, and a contraction in the margins is causing the stock to take a little bit of a tumble. We're talking about a washing machine stock here, don't get the wrong idea. It's down about 3% or thereabouts at 793. Yeah. All right, well, let's get into, or actually before we get into the stock of the day, Sameer Dalal with us, of course. Sameer, what do you make of the monetary policy? Short, sweet, and to the point and along expected lines, but does it present any opportunities based on what you saw, particularly with regard to the flows that are coming through for FCNRB and what that means for the banking sector as a whole?
So good afternoon, Alex. Good afternoon, Mahima, and thank you for inviting me to the show. So yeah, the policy was a moot point, kind of saying nothing really comes from it. we talked about the fact that you'd already mentioned that inflation is expected to be around 4.3%. So there's no reason for the government, for RBI to increase interest rates anytime soon. I don't see it happening in the next policy meet either, unless something changes drastically. On the other hand, if what Mark Rubio said yesterday, with the Strait of Hormuz getting resolved and opening soon, if something like that happens and crude comes off further, in fact, it may open up a window, for a further rate cut over the next maybe 3 months to 4 months. But we need to see how things play out. Having said that, markets will remain volatile because of the global geopolitical issues that continue and persist. But what I like about the market is that we are now becoming more focused on our domestic front. Just to put it, you all discussed QSR starting to move up across the board. Name it, it's all moved up. So the buffet is finally opened and people are making their way to the buffet. And I think that's something that we need to focus on, focus more on consumption of the domestic market, focus more on capital goods, which cater to Indian markets, where we think the capex cycle is now going to start reviving and where the opportunities will lie. Unfortunately, some of them are still trading at expensive valuations, but there are many which are attractively priced and at 52-week lows, and those make great buying opportunities.
So that's the entire view that Samir has. But the interesting one to watch out for in trade today is PTC India, because it's not like Q1 was very strong for this one, right? But something that Sharath pointed out very early in the morning is something that's actually taking the stock almost at 8%, at that 8% high. And I'll bring in Sharath to give us exactly that. It's a dividend yield, right?
Correct.
If you combine the last 3 years, it's more than that, right?
Exactly, you're right, Mahima. And also this stock is a multi-bagger identified by Vikas Khemani. But enough on that. But let's talk about how the stock has moved. Over the last 4 sessions, we are seeing a good momentum in the stock. The stock is on a 6-day gaining streak. 15% jump already in the last 4 sessions coming in. If you look at the momentum, it shows some good strength. If you could just show the performance, so the stock has touched its highest levels since the 52 sessions, or let's just put it in a 52-week high. Also, another key reason is, of course, the dividend part. The dividend, looking at that dividend move, it's around 23 rupees per share. Now, look at the current market price. That itself is less than 200. That means in yesterday's closing, it was a 13% dividend yield. Come on, just add all of them up and put it here. It's still more. Look at the magic here. Despite weak set of numbers, look at the momentum in the stock. The stock is up 8% as well. So yes, a dividend also gives you good returns, and maybe it comes on your growth numbers as well. But let's also point out the Q1 numbers. The trading volume, that saw 12% growth coming in terms of the units, but largely the numbers were on the weaker side. The total operating income was literally nothing. It's just up 2%. But if we go into the details and do a breakup, short term, medium term, especially the medium term segment, that is where a good year-on-year growth has been recorded, and even short term trading as well. The company is into power trading, largely nothing much happening for Bangladesh and the long term contracts. So operationally the numbers were, we could say, mixed, financially weak, but dividend, that's the new story for PTC India. So essentially, correct me if I'm wrong, there is another power exchange, of course, and we're talking about the peer being IEX. So therefore, this is not a business that requires a significant amount of capital expenditure. And they are very cash rich also. Exactly. That's a reason. And when there is a bad result, there should be one way to reward the shareholders. Yeah, absolutely. All right. Thanks so much, Sharath, for getting us those details. IEX is the competitor, and something that you need to bear in mind on the reaction that PTC India has had and the performance that it's had as well. So I want to come to you, Samir, on this particular company. It's not likely that this company needs a significant amount of capex, and so therefore what it does with its profit and distributing it is not such a bad idea. But what do you make of PTC India in the larger context, though? This whole market coupling story with the IEX and the fact that it hasn't yet come through. If it does come through, it would be advantage PTC India?
Not necessarily advantage PTC India, right? So PTC India is not directly an exchange. They do a lot of their own trading also in the power segment, right? So that's where a lot of the profitability comes from. The exchange is today, I think 92% of all exchange volumes of short term, which is the very short term spot trade, the next day trade, all of that is happening on IEX, which is not happening on PTC, right? PTC is slightly longer term. So the market coupling that happens may not drive PTC's volumes up significantly because there are other players who are there in that who may get some of the share. And again, secondly, it doesn't mean that people who are already getting a good amount of volumes on IEX need to shift if they're already working with IEX. What is the benefit of moving to a different exchange if the pricing is going to be calculated based on the average of all three? I might as well do my trade here and I'm okay. So it's not necessary that IEX loses its volume. So just to justify that, no, I don't think that's the end answer. Now, is PTC India trading at reasonable valuations? It's trading at about what 15 times trailing earnings. Growth is very limited in the near term, we believe. So, is there a reason for a re-rating in valuation? We doubt it. We don't think so. So, for me, at this point, yes, the dividend is fantastic at whatever they've given, 23 rupees, but that could be a one-off paying out of the cash. But it can, unless the profits keep growing at that, because their last year's profits were, I think, about what 13 rupees earning per share or 14 rupees earning per share, and they've given 26. So they've in fact paid out from their share capital rather than from their profits, and they cannot do that endlessly. So the profits need to grow to justify the growth in share price movement. I wouldn't go out and buy it just because the dividend is at 23 rupees. That's a one-off.
Okay, all right. So that's the comprehensive view that we've gotten for PTC India. The stock still trading at the day's high point. But RITES is the other one which is doing very well in trade today. And this is on the back of the Q1 numbers that it has come out with. It's been, a healthy growth led by largely growth in turnkey leasing consultancy, and the energy business as well. But let's try to decode these numbers, the order book especially. And to understand exactly that, we're now joined by Rahul Mittal, who's the chairman and MD of RITES, joining us now. Rahul, thank you so much for taking out the time. Mahima this side. I think I'll start with the order book first. You've said that for FY27, you plan to reach an order book of around 10,000 odd crore. You're already sitting at 9,400 odd crore, which is at an all-time high. Give us more sense as to whether this 10,000 crore order book guidance that you already have can be extended further, and if yes, by what quantum?
Yeah, good afternoon. No, so the Q1, we have maintained a trend of more than one order a day. We've got 128 orders, which is about 1.4 orders, totaling to 670 crores. And despite the execution, there has been a growth in order book between 31st March and 30th June. So the target that we've set ourselves of reaching 10,000 crores, that's definitely on track. The first month of Q2 is also showing us very healthy signs in that direction. So definitely, and the interesting part is, and the reassuring part is that this is orders coming from across the sectors. All our 13 infrastructure consultancy verticals, and both domestic and international, we are getting orders across the sectors, whether it's highways, buildings, metros, export of rolling stock, etc.
Mr. Mittal, hi, good afternoon, Alex here. I'm just wondering about the execution timelines of the orders that you've been winning. What is the average timeline that you would say these orders have?
So all our 4 streams of business across 13 verticals, by and large, all infrastructure projects have roughly about a 3-year time frame. And since the order book started jumping in a big way from about last 12 to 18 months back, this is a young order book. A substantial portion is very young. And that's why the execution this year is the year where, as per the guidance which we have given at the beginning of the year itself, that sequentially we will see a substantial growth in every quarter, so that the entire year we are aiming at least a double-digit growth vis-a-vis the last FY.
And growth is going to be double-digit?
Yes, for sure.
Okay. So therefore, and I'm just extending that, Mr. Mittal, and trying to understand. So if you're saying that it's a young order book, and FY27 looks robust from that perspective, and you're talking about 12 to 18 months, and if you're talking about 3 years, which means that FY28 would look even more robust. So therefore, what is the kind of number for the full year or for revenue that is penciled in? And this is obviously, there is complete safe harbor to say that this is assuming that everything else stays the same.
Yes, so FY27, we are, as I said, targeting a double-digit growth in the top line vis-a-vis the last year. And also, targeting an order book somewhere by the end of the year reaching 10,000 crores. So that's, as you said very interestingly, besides heavy execution, also a growth in order book. So definitely FY28 would build up from there above the base that we create in FY27. And there are stresses on margins due to various factors like the travel costs and etc. But primarily still, the aim is to have as much of a growth in the top line, maintaining our borderline, our red lines which we have kept for the EBITDA margin, so that there's an incremental growth in profits also.
To that, Rahul, just a follow-up in terms of margins. Like you mentioned, there's travel cost, there's also employee costs on account of which your margins have slightly moderated. But considering that you also have turnkey projects into picture and that those margins could be chunky, so just want to get a proper sense of FY27. Where do you expect the blended margins to be at, if at all there's a number to that?
See, we are very clear. We have set ourselves, as I said, red lines on a console basis, EBITDA margins in no condition falling below 20%, PAT margins in no condition falling below 15%. So despite the challenges, as you said, of the turnkey segment being a lower margin, travel costs going higher, then the pending pay revision which has to be accounted for somewhere this year, as well as since more than 70% of my orders which we are getting in the last year or so are on a competitive basis, which are definitely on a tougher margin. So all these factors being there, but still strategically, since we have about 700 plus consultancy orders that we are executing across our different verticals, what we try and do strategically is to have a blend of high and low margin execution, so that definitely we will not fall below the red lines of 20% EBITDA on a blended basis on the overall year.
Rahul, the other aspect is your international order book is now almost around 2,100 odd crore, and this, I suppose, is from that 9,400 odd crore that we've been talking about. Because Bangladesh was a one-off thing where it was impacted in terms of performance, overall, the order book growth has been very strong. Where do you expect this to go, let's say 2 years down the line, FY28? And do you think that the margins in your international order book are better than the domestic ones?
Yes, so our international business under the Rights Videsh initiative has two parts. One is the design and export of rolling stock, and the other is the project consultancy. Together, as you correctly said, they are today at 2,100 crores. It's about 22% of the overall order book. As the execution improves of this, the first rake of Bangladesh is targeted to go out in next few days, and subsequently this will only step up in the subsequent quarters. We are still maintaining the strike rate for the last about 7 trailing quarters of 1 export order a quarter. So despite the fact that this year we are aiming that international business would contribute roughly about 14 to 15% of the total pie of revenue, and aspirationally on a long-term basis, we would like to have our Rights Videsh order book being about 25% of the total order book and revenue about 20% of the total revenue.
Mr. Mittal, since we're talking about aspiration, just want to close out the conversation, and double-digit growth for top line for FY27 is something you've told us about. But the peak of the EBITDA that you've achieved over the last, say, 10 years or so was in FY23, it's close to 760 crore rupees, right? I'm just trying to understand, at what point do you think that the company will once again hit that mark? And of course, the full year margins were closer to that 30% mark. Based on the projects that you're currently doing, that may not be possible. So therefore, it's going to be a factor of how large the revenue pie goes. So when do you think that you can achieve that peak?
So you're very correct. You see, comparison of the order books mix and the margins and the competitive versus the nomination vis-a-vis from about 5 to 6 years back and now is totally different. It's about 70% plus on a competitive basis, both in domestic and international. International orders, we are getting literally all on a competitive basis. So you're very correct. To reach with the current margins of about 20-21%, the aim is to step up as much as on the top line so that you reach actual levels of the actual bottom line EBITDA and PAT of the levels about 5 to 6 years back. So definitely, while I don't want to preempt that, but definitely double-digit growth on top line minimum, building up on a CAGR basis, so that at least 2 to 3 years we are able to get that levels of actual profits and those EBITDAs.
Okay, all right. So that's certainly something to aspire to. Mr. Mittal, thank you so much for taking the time. Wish you all the best in achieving those aspirations and speak to you soon.
Thank you. Thank you.
All right, well, it's at the high point of the day, isn't it? Right, it's up considerably, close to 4% higher as things stand right now. Let's head across to Soumit Sarkar now to find out whether there are more stocks beyond just REITs in the space that is buzzing. Of course, on earnings, there's quite a bit that is buzzing and quite a few that are also based on khabar confirmed. Soumit, what are you hearing from the dealing rooms?
A lot of stocks that remain in focus. Firstly, a couple of them is Lenskart and Dr. Agarwal. I know dealers are expecting a block deal very soon in both the names here. Apart from that, Bajaj Twins also continue to remain in focus. There are buy flows on the institutional desk. Dealers indicate that large long-only funds have been accumulating both these counters in trade. And when on the flip side, there is Infosys and HCL Tech. There are sell flows on the DI desk is what dealing rooms are indicating for both the IT names in focus. Then given the fact that it's earnings season, Blue Star continues to remain in focus. There are sell flows on the large HNI and the PMS desk. Dealers are expecting a weak Q1 earnings. And on the flip side, there is Hindalco, Electronic Marts of India, Wellspun Living and Greenlam. All these stocks continue to remain in focus. There are buy flows here. Dealers are expecting a strong Q1 numbers to come in from all the four names. So keep an eye out for these counters in trade.
Okay, all right. Samir, thanks so much for that, Soumit. Samir, let me come to you on what you made of the conversation with REITs as well, right? And I'm sure that you were paying close attention to some of the answers that were given with regard to the trajectory, etc. So double-digit growth in top line and an aspiration to hit the peak of 760 odd crore EBITDA in 2 to 3 years, right? Is that something that enthuses you, or do you think that there are better opportunities in the space?
So honestly, there are better opportunities in the space, if you ask me. Look, this is a business that obviously has potential to grow. A 10% growth for a consulting business with some amount of turnkey work, nothing that exciting, because when you increase your turnkey work over the consulting, it hurts your margins. So for me, that obviously is not something that goes down well. Now, there are other businesses in the railway space, if you ask me, which have a great opportunity for growth. So if all these new rakes and metros and all of these things are happening, who are the guys making all of this? So there's Texmaco Rail, there's Titagarh Rail. Titagarh Rail is something that faced a lot of difficulty over the last year and a half, because they were getting shortage of wheels. So they were not able to supply the rakes to the quantity that they wanted. Plus, now that problem is behind them with their joint venture started, where they will be making the wheels in-house. So they will be able to scale the business up. Second, they are increasing the number of passenger coaches versus freight coaches. Now, these passenger coaches will have a much higher profitability. So as that scales up, we will see the margins expanding. And this stock has corrected significantly. Titagarh has corrected from 2,000 odd levels, I think maybe 2 years ago, to about 800. So you're getting it at a very decent valuation with the correction in the stock price and the correction in the earnings and everything. And now with the rebound, it'll do well. Then there's IRCTC. We think that is a fantastic idea, because look, they book 94%, 95% of all train tickets booked are booked through their portal. They have the food, the rights to all food sales, which is constantly increasing, and they're getting into this vacation and pilgrimage kind of packages which they sell on their platform, which is also gaining more and more traction. All of it capital light in nature, debt free, cash rich, and even a 1% increase or 2% increase in the per ticket revenue that they sell can change the dynamics of profitability quite significantly for them. So if that comes through, which we think can come through in the next year and a half, is something that can do really well.
Certainly. All right. So IRCTC and a couple of the others that have been mentioned to you. Nilesh, I want to come to you very quickly on a pair of stocks that has done well, particularly Bajaj Finance, but also Bajaj Finserv. After the results, it's been on an absolute tear. And according to Somit and what he's picking up from the dealing rooms, of course, it's come off the high point of the day, but take a look at the last week or so. It's done incredibly well. Would you take money off the table if you managed to get it about 10 days, 15 days back? Because it's up as much as 9% in the week, so over the last week.
Well, Alex, a very good setup we have already seen in last few trading sessions. So it's better strategy would be to take out the profit if you are making and wait for some meaningful correction towards 2050 or maybe 2000 kind of zone that will give a good entry point, because the stock has a major support at 1920. That should be your stop loss, and buy and decline should be the strategy. But in case somebody is making money, then these are the good levels to take out the profit and sit on a sideline for the time being, because the counter is overbought. Both the counters, Bajaj Finserv and Bajaj Finance.
Okay, all right. So that's the view coming in on both the Bajaj twins. But, we've decided to do bull versus bear on Marico today, because despite of posting a strong set of numbers, the stock did see, profit booking or pressure in trade today, and it's continued to do so. We'll take a look at what the bull versus bear case looks like for this one, though the stronger one, the stronger side is, of course, the bull side. But, in terms of the Q1 numbers, it was definitely a strong beat in terms of EBITDA and PAT, we've seen this beat across quarters for Marico for last so many quarters, right? But despite that, valuations are not looking cheap for this one, because 5-year average sits at around 54 times. The stock is currently trading at 58 times, and 1 year forward is indicating around 51 times. So the stock is not going to get cheaper. That's also one of the reasons as to why we are seeing profit booking today. In terms of the volume growth at 11%, a double-digit volume growth, which the management, by the way, has also said that they could do it in the next quarter as well, though the guidance is for a high single digit at a 12-quarter high. But like I said, the guidance still management has maintained at that high single digit volume. So next quarter or so, we could see volume come off slightly from that 11% mark. In terms of the segment specifically, Parachute has done very well. Yet another quarter of strong growth, 10% growth YY basis, again a 20-quarter high for this one. But on the flip side, Saffola edible oil was where volume decreased in high single digits, and this is on account of the hike in prices that they had to take for Saffola. Lastly, in terms of where margins go, margins this quarter were much better than what the street was expecting. The expectation was of around 19.4%, but it's coming at 20.7%. But going forward, I think for every FMCG company this applies, going forward, inflation is something that we'll be watching out for. Crude oil prices is something that we'll be watching out for, and that will decide as to how margins will fare. Because at the end of the day, if companies go ahead and take price hikes, it is going to impact the overall volumes, and in turn impact their overall sales as well. So this is the overall view and a bull versus bear summary of Marico. Samir, I'll quickly come to you on not just Marico but across FMCG. I think we've lost Samir there, but Alex, I'll quickly come to you.
Yeah.
So this is the whole and soul of how things have panned out for Marico this quarter.
Very interesting. All right, thanks so much, Mahima, for that. In fact, we've got Shivangi Sarda, who's analyst equity and derivatives and technical at Motilal Oswal, as well as G. Chakkulingam, who's the founder and managing director of Economics Research. Thank you so much to the both of you for taking the time, and good afternoon to you. Mr. Chakkulingam, I'll come to you on Marico because the numbers look good, and we just had Mahima present a bull and bear case. The Parachute volume was strong, the value growth was strong, the value-added hair oils segment has also looked particularly good. So a lot of factors working for the company. Do you think that it's all in the price, or do you think that there's an opportunity even at these prices?
Yeah, so to some extent it is in the price, because last 5 years the company has been struggling in line with many other FMCG. The profit growth has been a poor single digit at around 9% in the last 5 years. So that is why, despite quite impressive performance in June quarter, it's not reflected, the stock price much. So there is apprehension whether, this kind of year-on-year growth will be continued, or it's a one-time event. That's a doubt in the minds of the analyst.
Okay. I just want to bring on board Hiral. She is joining me in studio as well. Hiral, by the way, stock reactions, some individual stock reactions are quite sharp and robust today. We were just speaking with the management of RITES. That stock is up and about. PTC India is doing particularly well. Anything else that you've been spotting and looking at closely?
The names are seeming very interesting. The insurance pack, I don't know if you've spoken about that, but the
not on this show yet.
Pack, with regards to motor insurance is doing very well. Look at an ICICI Lombard. Look at a Go Digit. All of these counters up and about in trade. If you can just quickly pull up those screens. ICICI has cooled off, but you're still seeing gains of 1.8%. Go Digit, absolutely strong. 6 to 7% is the kind of up move that is coming in there. And this is only on the back of the changes where any new vehicle that gets registered will have to take a third-party insurance, which is changed from 3 years to 4 years. So that's the reason why these companies benefit. Mr. Chokalingam, any quick view on any of these general insurance, motor insurance, catering kind of names?
It is positive, no doubt, but the way the market is rewarding, I doubt whether it's in the right direction. Because just by paying in advance for 4 years, the insurance companies are not going to gain anything except possibly the interest income, on account of the payment of this insurance coverage well in advance. Otherwise, this is going to be compensated by, not receiving in the remaining 3 years. So there will be a marginal positive impact only to the extent of, getting the money in advance and making some, investment income and interest income. But otherwise, I think this reaction is overdone.
Shivangi, a quick view on individual counters that you may be liking, and just about 10 minutes to go for F&O stocks in the cash market. So if those are stocks, perhaps we should get them out of the way now.
Very good afternoon, Alex and Hiral. Thank you for having me. We've seen that the indices have witnessed some sort of consolidative move after the rally of the last 7 sessions with over 1150 points up move. Now, stock specific, of course, I'm looking at some counters. Eternal is one counter which is looking quite positive, holding on to the higher levels, and the QSR space or the new age company space is looking quite positive. And this stock has actually made higher top, higher bottom from the last almost 4 months, and we've seen good momentum adding up here at the higher levels. So this one's on radar. Apart from this, I think some of the counters, some of the auto names could be kept on radar. Selective names, but of course, these are doing quite well. So this is the space that I'm looking out for.
Okay. So that's with regards to where the auto index goes. Shivangi, any top picks there before I go to the next story that we're looking at in terms of SEBI, which has concluded the first round of discussions with qualified brokers. But before we get to that, quick top picks at this hour.
So definitely we've seen some of the FMCG pack run up because of the results of Marico lately. But overall, I'm looking at Grasim, which has given a Poland flag pattern formation breakout, holding on to the higher levels till the last hour of the trade. This one's looking quite positive, and we're looking at around about 1380 and then 1400 levels for this one, and with a support of 1300 zones.
Shivangi, which stock are you talking about?
JSW Steel.
JSW Steel, yeah. We just have a Grasim which is on the screens, but it's about JSW Steel as we speak. But moving on. Sources tell NDTV Profit that the SEBI has concluded the first round of discussions with qualified stockbrokers. Now let's get Nimit to tell us more. Nimit, good afternoon. This is everything to do with the first 2 sessions of CAS that have been concluded. Today is day 3, and I'm sure a lot of concerns, a lot of discussions, etc. that have gone by. What are you picking up from your sources?
Yeah, so there are 2 key things that SEBI has told the qualified stockbrokers in this first round of review that they're doing with the brokers. The two key issues they've raised is first on awareness, saying that maybe brokers have not done enough on awareness and need to do more to build that awareness. And secondly, they've reiterated and made it clear that retail participation is key here in this CAS program to make it successful and to make the volatility stabilize. Now what the QSBs have said here is that they sought 2 to 3 weeks to complete front-end integration on their apps to improve retail participation. Now we also understand that this meeting is part of a longer review that SEBI is doing now and is going to be meeting with different stakeholders. The key message that it's going to be making to all stakeholders is that we need to ensure larger retail participation, and that will directly reduce the volatility that it's causing right now.
Yeah, absolutely. All right. Thanks so much, Nimit, for getting us those details. All right. Let's focus in on another cohort of stocks that's doing well, and that's in the metal pack. And I do want to ask Shivangi what she has to say about this cohort of stocks, particularly the likes of Hind Copper, Hind Zinc, Hindalco. These are stocks that are buzzing, and Hind Copper is up as much as 8.5%. Would you ride that rally?
Definitely, Alex. Metal pack is one such space which is looking quite positive. In fact, from the last 3 days, we've seen that there was some sort of OI which was adding up, and from the last 2 days, we're seeing the price conversion as well. Now, Hindalco is doing quite well given a bottoming out structure on the daily basis, and we've seen that there is a negation of the lower top, lower bottom formation of the weekly frame as well. So this one's definitely looking quite positive. Hindalco, if we have to look at the levels per se, one could look at 1080 and then 1100 levels with a support base of 1020 levels. Now, apart from this, of course, I discussed JSW Steel, which is looking quite positive. And National Aluminium, NALCO, is one stock which is also quite resilient and has come out of the consolidation of the last 5 weeks. So this one should also be kept on radar. Slightly muted performance today, but overall, this one's quite positive as well.
With regards to NALCO itself, we have seen a double upgrade as well that did come in from a Kotak Securities recently, and there was a lot of momentum since then. But let's quickly pull up a Berger Paints, and if we can just get an intraday chart. Profits up almost 20% at 404 odd crores is what you're picking up on a sequential basis. Revenues have grown 25% as well. So the revenue and the profit growth, if you go to see, is pretty much in tandem, which is a positive. You're seeing the stock also climb to the day's highest levels. That vertical spike that is coming in there. 3,584 crores is what you're tracking in terms of where the top line goes. The profit number, 21% at 404 odd crores. And this is on a sequential basis that you're talking. 26% EBITDA growth, 607 odd crores is where the EBITDA has come in at. So again, strong growth momentum on that front as well. And I think this is clearly telling you that the margin picture is also looking strong. And this is in spite of all the supply side constraints that we were talking about. Crude derivatives becoming one of the key components there.
Yeah, and the stock is at the high point of the day and climbing further. The question is, how much of this is on account of inventory gains that have come through? In that they have undertaken price increases over the course of the quarter, Hiral, and this is something that our colleague Ridhima reported on consistently. It's not just Berger Paints, it's also Asian Paints. All of those paint companies undertook price increases over the course of the quarter. Maybe they had a benefit of raw materials that they already had in inventory, and so to a certain extent they had that benefit come through, and whether or not this is sustainable heading into the second quarter is something to pay close attention to. However, one can't take away the fact, and there you have the margin picture there, it's an improvement by about 20 basis points on a sequential basis that has pushed the uptick in net profit to the extent of 21% on a sequential basis. We'll find out from Mr. Chokalingam what he has to say about Berger Paints after this very quick break. Stay tuned. We'll be back before you know it.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Welcome back to India Market Close on NDTV Profit. Let's quickly just pull up the markets once, because you have Nifty 50, which is nearly at the day's lowest levels. And if we can just have that sectoral heat map once again, no, in fact, that mild uptick from the day's lows is what you're seeing. You're hovering around that 24,500, 550 kind of mark. Metals, auto, real estate, PSU banks gaining. What's losing out is the financial service sector. So you have banks, services, FMCG, oil and gas, IT are the ones which are down in that range of 0.3% to almost 0.5%. But the top gaining sector continues to remain metals as we speak. And what's driving this kind of rally as well is the key question. In fact, let me actually head across to my colleague who's standing by to tell us what's really happened with the small cap index as well. You have Nifty small cap, which has scaled a record high, and this is after 406 sessions. But the broader small cap 250 has slipped 1.7% from its peak, signaling a need for caution. Parth is here to share insights on the small cap rally. Parth, the question is, will people really make money on this rally, or this momentum is not going to be sustainable? What are the cues that you're picking up so far? Good afternoon.
Good afternoon, Hiril. Well, the momentum so far looks pretty much sustainable, and that's how the markets have been behaving in the last couple of years as well, where small caps pick up the pace first, and then mid caps and large caps follow them. And that's what is happening right now as well, with small caps outperforming the benchmark. If we first talk about the small cap 100 index, it has hit a new all-time high after 406 sessions. That is almost after 21 months. The last all-time high was on December 2024, and not just small cap 100 that is outperforming, also small cap 250. To cover an even broader view, that is also down just 1.7% from its last all-time high from September 2024. Now, if we pull up the index performance to get a better view, in the last 1 month, both of these indices have gained almost 2%. In the last 3 months, almost a similar performance of 8%. In 6 months, small cap 100 has outperformed, gaining over 15.5%, while small cap 250 is at 14%. And on the 1 year side as well, small cap 100 gaining almost 11%, and small cap 250 gaining 7.5%. So with the small cap 100 index hitting a new all-time high, let's look out the top 5 winners, the gainers that have led this movement. The first one is Ather Energy. It wasn't even listed back in 12th December 2024. It got listed on 5th May 2025 and has gained over 379%. The main trigger behind the rise in Ather is that Q1 revenue has gained over 90% year on year, with the company reporting its first ever EBITDA positive quarter as well. The second one in the list is Force Motors, which has gained over 180% since December 2024. The third quarter of FY26, the net profit jumped by over 250% year on year to reach over 400 crores. The third company on the list is RBL Bank, which has gained over 119% since December 2024. The main trigger is that Emirates NBD has acquired a 60% stake in the company, in the bank, for over 26,000 crores. That's what has driven this rally in RBL Bank. The fourth one is Welspun Corporation, gaining almost the same level as RBL Bank at 118% since December 2024. The main reason is order book growth on the back of US order wins that has grown above 25,750 crores. And the last one on the list is Naveen Fluorine, which has gained 113%, with Q4 PAT seeing an uptick of above 120%, mainly led by CDMO growth. So these are the main drivers that have led this rally in small cap 100. And let's hope that this rally continues towards large caps and we see a brand new all-time high in Nifty pretty soon.
All right. That's certainly something to hope for. Thanks so much, Parth, for that.
I mean, Parag Thakkar today was very optimistic about it as well in terms of at least Nifty 50.
Yeah, he was. By the way, the cash market for F&O has shut. And in fact, take a look at the last tick perhaps at this junction. Of course, you'll see a settlement later on in the session, I should say. It's currently at 24,570. Pull up the Nifty 50 futures though, and we can do a comparison perhaps and take a look at where it is at, and you can look at maybe the Nifty Bank futures as well, and we can see where it's ending at. So, but remember the value of the Nifty 50 at 24,570. So the Nifty 50 futures currently trading at a premium of about 80 to the spot at 24,650. Remember 24,570, because that's something that you should compare with the closing levels that we'll come to know closer to 340 today. And we've seen a bit of a diversion, to say the very least, over the course of yesterday and day before, between the closing level at 315 and the final level at 340.
Absolutely, and that's how it has been, right? And I think from the stories that Shrimi has got for us on CAS, or Nimit has got for us from SEBI as well, all of them are indicating that somewhere the participation needs to be higher to make sure the system actually works well and in the benefit of all the traders, investors, et al. And I think that's what needs to happen from here on.
Yeah, because at this moment, and this is something that came in as advice from a number of people that understand derivatives. This is not a space that a retail investor or retail trader can get into and succeed. It's where the institutions will come in and make the price, and it's not something that you can perhaps venture into. So the call has been essentially to close out your position. Shivangi, would you buy into that kind of an approach right now? Is caution warranted beyond 315? Is that a space that you should ideally not venture into unless you understand what is going on?
Yes, Alex, absolutely. This TAS system which has come into play, it will take another, a week to again settle down and for the people to start participating in it. But of course, in the long term, this is going to only ease the last hour volumes and the volatility. And looking at the immediate, movements that we've seen, that of course the spot is kind of shooting up where the futures are down. Of course, the improvement we've seen is that the premiums were very high on Monday, which reduced, on Tuesday. So we'll obviously have to look out for it today. But we are still recommending that once this, system settles down and the people are in practice of the same, till then, I would suggest that, you should square up the positions, round about 315, and because of the kind of crazy movement that we're seeing. And also expiry day, some, decay is not happening till, 315, which was earlier the case. So now that will also be a challenge to look out for the next few expiries.
Okay, so that's with regards to the view. But, Shivangi, one question I have for you is, this is the third session. In terms of your observations at the rates that we close at 315, once it opens up yet again in terms of the auction window and the final closing price that we see at 340, what is that key observation that you've had which is becoming a trend? I mean, too early to call it a trend, but something that has just started to build on over the last 3 days.
So from the last 3 days, I think one thing is very common, that futures are closing at a discount of the spot. So that will be important to look out. Earlier, this trend used to be there when the market trend used to be kind of slightly negative, but overall right now, the other factors are adding to this trend. So this is one thing to look out for, of course. And the option open interest is kind of acting up till the end of the session. So even that is quite significant, which is different from earlier. So I think these would be important to watch out. But of course, this is aimed to settle down in the next course of time.
Okay. So then, okay, thanks Shivangi for that. Stay with us. A quick question I want to take with Mr. Chokalingam as well. Mr. Chokalingam, I'm sure, there are a lot of murmurs, etc. that are happening in and around the markets right now with regards to this cash window that is opened up over the last 3 days. What are you making of it?
Definitely, I should admit that my ignorance as well as understanding this F&O segment and its implication. So kindly excuse me.
Sure, no problem. Okay. The other thing I want to talk about is Bharti Airtel, Mr. Chokalingam, with you. In terms of the earnings, what brokerages made out of it as well. We did have the opportunity to listen to the con call where Shashwat Sharma, MD and CEO at Bharti Airtel, highlighted the pricing architecture in telecom sector for a long-term growth and emphasized the need to start data usage charges as well. We'll first listen in and then I'll come to you. Let's listen in.
Postpaid is a key ARPU growth lever for us, with significant opportunity ahead of us. Our recently launched Fastlane technology, leveraging network slicing on 5G, is delivering the differentiation on postpaid, which is driving an acceleration of the business. For upgrading customers here, we are focused on driving persuasion, simplification of our journeys, and superior value discovery across all our channels. Within prepaid itself, we continue to see a large opportunity to move customers to their most relevant plans by using customer context and next best action capabilities that we have developed on our digital stack. In addition, handset upgrades from feature phones to smartphones, rising data usage, 5G adoption, and international roaming provide meaningful headroom for ARPU expansion going forward. I do want to reiterate that the longer-term pricing architecture of the industry still needs to be repaired, and the industry must charge for data consumption. This is paramount for sustained ARPU growth in the longer term.
Okay. All right. So the ARPU was better in the quarter gone by, just primarily because there was one more day in the quarter gone by compared with Q4. But there was a little bit of an ebb in a couple of their businesses, broadband as well as DTH. Is that what is causing the stock to lose a little bit of steam, Mr. Chokalingam, or is it the gain that it has had in the recent past that is causing people to take money off the table? And would you say that it's an opportunity to get in at these levels?
Yeah, there are two parts to your question. One, yes, the latest quarter here, the momentum in profit growth has come down. That is what is affecting the stock price. Second, it's a fabulous stock for long term. Whether you take a market structure, which is favorable to the top player like Bharti Airtel, and data, the growth opportunity for data segment is fantastic. ARPU is steady.